All right. Hello, everybody. Welcome back to another market close. It is Thursday, March 7th, 3:46 p.m. It's been quite an exquisite day. I love that word, exquisite. There's something exquisite about that word. The day has been pretty interesting for a variety of reasons. We've had Bitcoin basically go up and down and up and down, and I know that's what Bitcoin does, but right now it's at 68,000. It went from 68.5 all the way back down to 66. Now it rebounded back to 68. There are people that are saying that, look, maybe this thing hits 70,000 tonight. We'll see what happens, but there is a lot of volatility there. Got to talk a lot about some updates with Bitcoin. Tesla and SpaceX might have actually bought Bitcoin and are still holding Bitcoin. Bitcoin inflows, the ETFs bought 12,000 Bitcoin yesterday. The miners only produced 900. So we got to talk a lot about Bitcoin, what's going on with Bitcoin. Ethereum is $64 away from hitting 4,000. So that's going to be a big milestone for Ethereum. That's going to be a very psychological milestone for Ethereum. So that's going to be important. We have earnings after the bell. I believe we have Costco today. We have MRVL. Yep, we have those earnings today. What else do we have after today? TTCF. Are they actually reporting earnings? Is that company even still? I didn't know that. I don't know if Broccoli's playing around or we actually have them. But we have a bunch of earnings today that we're going to talk about as well. And then obviously Palantir, 27.44 today. Right now it's at 26.58. So it has been sold off since the morning, but they had their aipcon. I'm going to give you my raw sort of overview thoughts on it. I have a video coming out later talking more about aipcon. But overall, it was really good. And to me, it was very exciting. It was very interesting in terms of the different use cases they presented. And I think all of that is going to eventually lead to more customers and more revenue for Palantir, because it's going to be a lot more growth, let's just say, based on particular customer dynamics when it comes to implementing boot camps that hopefully the street is going to start to recognize a little bit later. Having said that, let's get into it. Navate, Arthur, Trucker Rob, Carl, Broccoli Bob, Al Money, David, Ray, ET FaceTime, Johnny, Kelly, hello. By the way, Kelly just bought a new Tesla. I gave her my credit card and I told her, you know what, babe, you earned it. You deserve a Tesla. Speaking of Kelly, by the way, let me just show this real quick because I think it deserves to be shown. And she actually did buy a Tesla. I'm not kidding. She used my credit card, but she did get to buy the Tesla. So super exciting stuff for her. Yesterday was the 2-year anniversary of Kelly sliding into my DMs. So I just want to make sure everyone sees this in the chat. For everyone who calls me a simp, look at this. Oh, hey, cutie. Yeah, you win. I DM'd first. My bestie would be so disappointed in me. Yo, the oh, hey, cutie has me dead, yo. 2 years later, the oh, hey, cutie still has me dead. Like, it really still has me dead. Oh, hey, cute. Like, who starts a conversation? Oh, hey, cutie. It's like, I was like, all right, sure. Like, this is how we're doing it. This is how we're doing it. So, 2-year anniversary of Kelly sliding in my DMs, and the joke's on me because obviously it worked. But she also did indeed buy a Tesla. So everyone congratulate Kelly for that. She's been driving like a Toyota Prius for like a long time. So it's a big deal to drive a Tesla. Model 3 is what she got. And speaking of Tesla, we also have Rivian that we got to talk about. They had some event. I didn't even know Rivian was having an event, but they had an event today. Some R2, R3, D2 thing that they put out. So we'll talk about them as well. And this is the tweet for her Model 3 that is now officially live. Futbucker, Austin, Leslie, Lang, 94 clips. Thank you everybody for being here. Let's get into it. All right. So I think we'll start off with Bitcoin because we got a lot going on right there. And then we'll get into Palantir right after I discuss some of the stuff I wanted to discuss on Bitcoin. So right now, Bitcoin is at 68,000 and it's trying to maintain some momentum here. The thing about Bitcoin that's been so interesting is I think we're all kind of just staring at it, waiting for it to crack all-time highs. Look at that, right under 68,000. And it's just not letting us get to those levels. And it's really annoying because everyone's, waiting for it to happen, but it's not happening yet. And there's going to need to be a big whale that comes in, whether it's an institution or a retail investor, and pick up some of that Bitcoin. And in the context of Bitcoin, here was the breaking news this morning that got a lot of people talking. Arkham Intel, which is, I believe, an investment firm that does research, has identified that Bitcoin holdings of Tesla and SpaceX, we are the first to publicly identify these holdings on chain. We believe Tesla currently holds 11,000 Bitcoin, which would be worth $780 million across 68 addresses, and SpaceX holds 8,000 Bitcoin, which would be $560 million across 28 addresses. So you've got Arcom that's basically saying actually Tesla and SpaceX own Bitcoin and they're probably not selling yet. And you could imagine if Tesla or SpaceX were to pull the trigger, that's thousands of Bitcoins that would be sold. Obviously, they would realize those profits. Those profits would then actually help their earnings, at least Tesla, because SpaceX is private. And that might actually be really good for the overall earnings for Tesla, but obviously that's not going to be good for the sell side pressure that happens for Bitcoin itself. So it's going to be really interesting to see kind of how the dynamics play out over the next couple of weeks in regards to Bitcoin and some of the Bitcoin ETFs and inflows that we are going to be able to see. Now, on top of that, the miners ended up buying a decent amount of Bitcoin yesterday, about 12,000 Bitcoins that they bought. Bitcoin spot ETFs, as you can see in this chart, now have Zelena, hello from Frankfurt, Germany. Hello, thank you for being here. 50 billion in assets under management. If I'm not wrong, I believe gold has a total of 90 billion under their ETFs. So, and I might be wrong on that, but I'm pretty sure gold is 90 billion overall in all the gold ETFs. Brazil just started loading up a bunch of different ETFs that they're starting to launch for Bitcoin. We have over half the amount of assets in gold. And it seems like if this demand keeps continuing, this is not slowing down. I mean, what happens when there's $100 billion AUM for these ETFs? These ETFs, if you bought them on launch, you're up 30, 40%. So they're the most successful ETF launches, I think, in a very long time, maybe of all time. And as a result of that, Bitcoin is getting more momentum because obviously we're seeing a lot more people bring their cash in. Here's an interesting stat for you as well. 5 companies, Apple, Microsoft, Google, Amazon, and Meta, are hoarding a combined $517 billion of cash. A mere 1.67% of that is equal to 8.5 billion of total net inflows into Bitcoin ETFs so far. So 5 of the biggest companies in the world have 517 billion in cash, basically half $1 trillion cash. And about 1.67% of that is already the total inflows that the Bitcoin ETFs have received. If those companies were to allocate 1.6% of that capital into Bitcoin, you would have the same amount of inflows that you had in the past 34 days into the ETFs, which just goes to show how much money is out there that could be allocated to this asset if this asset continues to perform in the way that Wall Street, or at least Bitcoin hodlers, think that it can actually perform. So that's what you got in terms of your updates on Bitcoin, and we'll obviously look more into it as we get into the market close. Next thing I want to talk about is Nvidia. I want to talk about Nvidia because the title of the stream is that it's Nvidia's world and we just live in it. And I think that is correct. It's Nvidia's world and we literally just live in it. Jason says, what's up, Amit? Jason, thank you all for being here today. So Nvidia stock price right now is at $924.20. It's up 4% today. It's up 87% year to date. It's up 102% in the past 3 months. For the past year, it's up 300%. For the past 5 years, it is up 22x, 2,200%. Look, I mean, it's up 20% in the past week. At some point, either this thing just keeps going forward and it breaks 1,000, which it looks like it's on the trajectory to do so, or this kind of collapses. And I'm on the side that this is going to break 1,000 before it collapses. If we get a red day, sure, it'll pull back. That could happen. Rivian, by the way, is up 13% right now. So the bottom of that was $10.07 right now at $12.47. But it seems like, and we talked about this on the market open, the stock market does not know where to allocate their capital. And they're picking Nvidia as like the place to save their capital, hide their capital, and obviously potentially grow their capital because they just think that the earnings are not stopping when it comes to Nvidia. And I think they're right. I think most of us can agree that Nvidia's earnings are not stopping. The question becomes, at what point does this get ridiculous? Like, is 1,000 a share, is this ridiculous? At 1,200 a share, is this ridiculous? I don't know. But so far, I mean, this thing was 674 on February 21st, the day the stock market dropped 5% because we thought Nvidia was going to crap on earnings. And Nvidia did not crap on earnings. They absolutely crushed. As a result of Nvidia going up, we have a new all-time high on the S&P 500, 515 on the S&P. Guys, the market thought 510 was going to be hard to get to by the end of the year. The most bullish analysts thought 520 would be hard to get. And now Barclays had to raise their price targets to 5,400. Like, no one thought March 7th, 2024, the S&P would be at 515. It's only up about 9% from 4,800, where we topped out back in January of 2022, but obviously it's up pretty well. Year to date right now, it's up 9%, and over the past year, it's up 27% from that October 2022 low, where we were at, as you can see on the chart right here, 340, around 350ish. That was the low. So we're up significantly from then. And the market has rewarded people and companies that have put up the numbers. And the one thing I will say is that the reason this is different from 2022, and look, in 2022, even I didn't understand what was happening, or 2021, but I did know that a rock selling for $17 million doesn't make sense. The companies that have put up the numbers are getting rewarded. I think there is speculation in the market, but it's not to the level or to the magnitude that it was in 2021. And as a result of that, it seems like this is a real bull run that's happening, not just some zero interest rate phenomena, especially because interest rates are not zero anymore. So that is also something that's interesting. Chana says, just like it's amidst world, and we are the hobos living in it. You guys aren't hobos. You guys have a home. Your home is my channel. Obviously, your home is my channel. Amit, either it goes up or down. All right, so this is becoming a meme. You know how we have memes on the channel? We have Courtney. We have this stupid muted meme that you guys tried again on the market open, and I kind of fell for it, but I'm not falling for it again. So if you guys say muted, don't act like I'm gonna be like, oh, let me check my phone. Just like, no, I'm not checking my phone. I'm trusting not my intuition, not my gut. I'm trusting the fucking mute button that is not pressed right now. All right. So if you go on that tangent, I'm not falling for this thing again. The next meme, it seems like that's become prevalent on this channel, is it either goes up or down. Because multiple people I've seen in the chat have basically started to say, wow, the quality of Amit's analysis is that if it keeps going, it'll go higher. And if it doesn't keep going, it'll go lower. I'm just here to say that that is good analysis, even if it's basic analysis. The question becomes, how is that analysis communicated? And the reason I think you guys like hearing me say it is because I communicate it in a particular way that is basic but intellectual at the same time. Like, look, if Robinhood gets below 1635, it will be below 1635. But if it gets higher than 1640, we're going to see a run on Robinhood past 1640. The way I just said that sentence, like a third grader could say that, but the way I said it, there is something unique about that creates the intelligent analysis that people love to listen to. So that's what we're doing right here. See, I'm seeing muted in the chat, and it's not muted. It's not muted. So I'm not even trying to trying to Amit needs to lip sync to get back at us. Oh my God. All right. So Bitcoin 67,716. We have earnings after the bell. Let's make that quick earnings thing. Let me know the tickers that we have on earnings today. I know we have Costco. So we have Costco today. Oh, I added that to crypto. Hold on. I have to make a new watch list. What is today? 3/7 earnings. Okay. So 3/7. We're looking at Costco. And then what else are we looking at? MVRL. No, MRVL. Sorry. Marvel. Okay. Jess says Amit can stall like no other. Honestly, this is why I was good in school when we had to do class presentations. I would just dude, in school, like when we had a group presentation, the entire group that was let's say I had 3 group members, they got so happy if they were paired with me, because they were like, this motherfucker's just going to talk the whole time. They were like, because everyone's afraid of public speaking when you're in 9th grade and shit. I was not afraid of public speaking, dude. I got up in front of English class and I was like, so Huckleberry Finn, blah, blah, blah. And I just they let me talk. And so everyone wanted to be my partner because they knew that this motherfucker wouldn't shut. They knew that this nerd would just keep talking. Okay. We have Broadcom. We have a minute till the market closes. And then what else do we have? BBAI. This one has run up a lot. BBAI down 1% on the day. It's up 200% this year. AVGO. Yes, AVGO. That's another, I believe, semis play, right? Oh, no, I already put that. Broadcom. Yeah, that's Broadcom. Okay, so these are the main ones. These are the main ones that we'll see today. Mongo. I'm using Mongo. By the way, the software I'm launching tomorrow is going to be using MongoDB on the back end. So I have some experience now with Mongo. So cool. That'll be fun. All right, here we go, folks. It is Thursday, March 7th, 4 p.m. Thank you, everybody, for being here. The market is now closed. All right, the market is closed. We still got a lot to talk about that we haven't talked about so far, and we've got to cover earnings. So let's see how the market ended. Tesla actually had a good day, up 1.2%. I was on the phone with someone this morning, and they were a little afraid that Tesla was going to dip down to the 165-ish range, but it held up strong, 178 today for Tesla. Bitcoin, 67,640. Ethereum, 3937. It wants to get to 4,000, but the market makers are not going to give people the psychological dopamine of seeing it get to 4,000. Open Door, $2.97. It was up 0.68% of the day. SoFi actually was up 1%. It fell to $7.20 today, but it got back to $7.47. I did pick up some more SoFi $10 2026 leaps. S&P 500, 514, up about another percent on the day. Snapchat actually up 6%. I don't know why the hell Snapchat's up 6%, but maybe Snapchat just got beaten up too much. This is the same story we see every 4 months. They report earnings, they crash 30%, then the market's like, well, they're kind of cheap. Someone buys them up, and then they crash again 30% after earnings. So maybe the same thing happens before Q2. Netflix, 608, up 1.81%. Square, up 2.2%. Roku, up about 1%. Roblox, up 0.61%. ARKB, the Bitcoin fund, up 1%. And then IBIT probably up 1% as well. Palantir ends the day at 26.47, now 26.41 after hours. There's no real main reason that it fell from 27.44 to 26.47 other than people sold the stock. So the reason the stock fell is because people sold the stock, just making sure everyone understands that the reason Palantir fell from 27.44 to 26.47 is because people sold the stock. But outside of that, I mean, there wasn't anything crazy exciting in the aipcon. Again, I will talk more about what's happening with aipcon in a little bit, but it wasn't anything like groundbreaking that was like, people just had to buy the stock. And the stock is up, 10% this week. So regardless of it coming down from 27.44, still exciting momentum we saw on Palantir. Nvidia ends the day 9.28. It's actually up after hours. That's incredible. Mag 7, let's look at what Mag 7 is, then we'll get to earnings. Microsoft is at 409, Meta's at 512, Google 135. Meta basically broke out today. Amazon 176, Nvidia obviously breaking out up 5%, Tesla up 1%, and Apple 168 on the day. They bounced to 170 from the 168.62 low. Now they're at 168.81 after hours on the day. Earnings so far, I don't think we have any results because everything is flat. We have Mongo, Big Bear, Broadcom, Marvell, Costco. We also have DocuSign. I'll add these guys, DocuSign as well. And so we'll be looking at all the earnings today. Amit, let's listen to Costco earnings. Let me know if you guys want to hear Costco earnings. If we want to hear Costco earnings, then I will play Costco earnings in a little bit, in like an hour, and we'll listen to it. Celsius hit 90. Wow, I did not see that. I did not see Celsius hit 90. Oh my god, dude. Congrats. See, this is what I'm saying. This is this thing about this market, dude, is if you produce good numbers, the market lets you rip because there's like nowhere else for them to put the money, right? They're like, we're not going back to Mac 7. That's like not really growing as much as we wanted outside of Nvidia. And so Celsius, a company that's an energy drink, if they're putting up numbers, then yeah, the market is going to reward them. Everyone wants to listen to Costco. Okay, so we'll listen to Costco. Remember, Costco was the first company to show there was deflation in July. They were kind of warning that, hey, this thing is gonna get pretty wanky here. And then it ended up actually coming true. We saw a ton of deflation. Costco right now is at 785. They were up 1% of the day. Let's look at their 5-year. I mean, this is incredible. They were $208 in 2019. So it's basically 3x'd since then. And at the lows of 2022, they were 407. And then in the summer, they were about 495. So just been an incredible run for Celsius here. Okay, or for Costco. So let me see if I can get numbers. No crazy after hours movement on any of these guys. I have everything loaded up on Twitter, so we'll see if these numbers actually come out and what it looks like here for earnings. Can't believe I was selling Celsius in 2018. Stock was at $1.50. Yeah, dude, it's rough. Celsius in 2019, 2020, they were at like $2, $3. The stock has just done incredible since then. I mean, it's really showed its momentum. Like, it's really, really showed that. All right, let me pull up CNBC as well and see if they have any earnings as we're waiting. And then we'll see what happens. And then I'll do a little Palantir AIP segment as well. Let me just see if we can get some of these earnings. Okay, so they're awaiting Broadcom. All right, so let me talk about Palantir AIP for a couple of minutes, and then we'll load up Broadcom by CNBC. Okay, so Palantir. What was happening on Palantir? Lussy Picker says, hey, Amit, there was an analyst on Yahoo Finance today that thinks Palantir is a pass. What are your thoughts? Lussy Picker, I think you're talking about Rishi, who was the analyst on Yahoo Finance that we looked at this morning. You might be talking about someone else, but Rishi Jaloria, the $5 price target from RBC analyst, was on Palantir. And he had some stuff to say. I think a lot of the stuff he said made no sense. He said they're not an AI company. The boot camps aren't real. I was just like, okay. I mean, like, if you saw what happened on AIPCon today, I think he would have changed his mind, but we'll see if he actually changes his mind. Now, AIPCon. What was exciting about AIPCon? Let me spend 2 minutes on this and then we'll get back into earnings. I think the biggest thing about AIPCon is not that the presentations were that incredibly exciting. In fact, the first 4 presentations, and me, Arnie, were on the call together. It was kind of boring. It was kind of PowerPoints, ironically. Carp says we don't care about PowerPoints, and the presentations were not really use cases of actual demos. They were more so just like legitimate PowerPoints. So it was like some high level stuff, which was fine. I think the biggest part was Panasonic's presentation. They showed how you could incorporate mixed reality headsets into their workflows. I thought mixed reality was only going to be in the defense space. Apparently, mixed reality is not just in the defense space. Mixed reality is absolutely beyond the defense space, and it's in the commercial applications of how these companies like Panasonic are using mixed reality and data integration for different use cases. This is the company that makes the batteries in Tesla, right? So there were some really unique cases we saw there. And then the final thing I'll say on on AIP conferences, that the last presentation basically showed how Palantir is creating a knowledge repository of every single bootcamp they've done, putting it into one LLM, and then using that as the quote unquote forward deployed engineer for customers, potential clients, and then other entities that want to attend a bootcamp but can't physically be there. So it kind of has this infinite software version of scaling AIP bootcamps. And then it also allows customers to be able to run their own bootcamps as well. So that was the exciting thing on aipcon, and that's why I thought it was really good. And it was really interesting to see how that played out. Okay, we have some earnings results. DocuSign is up 13%. MongoDB is down 9%. Broadcom the earnings are out, but we don't have any after hours movement. Big Bear is down 3%. Marvell is down 7%, 8%. Costco is also flat. Okay, so let's see. Let's see if CNBC has any of these numbers. I think they probably do. And okay, here we go. I think we have it. So let's see the numbers they have, I believe, on Broadcom, and then we'll get into the rest of the numbers. Expectation. No, they don't have it. Oh, I thought they had it. Okay, so they should be getting it soon. All right, so let me get the actual numbers themselves. So the biggest move we're seeing is Marvell, MVRL. So let's see, MVRL. Let's see their numbers are. They're down 10%. That is a lot. They're a semis play, so they're in that semis ecosystem. I believe they're in the SMH ETF. BBA, massive miss. Okay, let me pull up BBAI as well. Big Bear also collaborated with Palantir a couple years ago. I made a video on that a long time ago. I don't know if they're still collaborating, but they were. Yeah, numbers aren't out for any of these guys. Numbers aren't out. The street has them, but I don't have any of the numbers yet. Not on these guys. Let me also see if I can get the IR page loaded up. And then Costco is the next big one we're really looking for. Costco is a really, really important one to see what we can get. Costco, I pulled up their IR as well. Big Bear, numbers are not out yet. Numbers are not out for Big Bear. SMH was up 3.5% today. Yeah, because Nvidia fucking went up 5%. So like that's why SMH was up. Marvell's down 10%. DocuSign somehow is up 15%. Mongo's down 8%. So let me try to get Mongo's numbers as well. MongoDB IR. MongoDB it's essentially a database. I don't have the best understanding of it, but it stores your data. Like I'm using it now for the software that I'm building. And so it's not, I mean, look, it's not that, and I pay $20 a month. It's not that crazy. So it's cool, but it's not the most exciting company. Okay, Mongo is out. I got Mongo. Okay, so here we go. Here's Mongo. B. Martin says emit and speaking slow is like an oxymoron. We have a bunch of new people that are joining the channel, and they're like, hey, why are you talking so fast? And that's how I know that they are new to the channel. Okay, MongoDB. This is what we got for Mongo. Fourth quarter results. Total revenue, $458 million, up 27% year over year. Total revenue for 2024, $1.68 billion, up 31% year over year. Continued strong customer growth with 47,000 customers. Revenue up 34% year over year, 68% of their total revenue. Why are they down? They're down 8%. Why are they down? The market cap of this company is $29 billion. They're doing $1.68 billion in revenue. So they're trading at 30 times revenue. That's a little steep, but they're not profitable. So that's another reason the street probably is not that excited, because valuation might be getting up there if they're not putting up a profit. Again, Palantir, SoFi, Robinhood, putting up profits were so important, dude. If a $30 billion company can't put up a profit, you need these smaller companies to put up profits in a high interest rate environment. Cash flow, $2 billion in cash. Revenue, again, $1.6 billion. They're growing 30% year over year. That's amazing. That's not bad. What's the guidance? All right, so what's the guidance? They are guiding for $440 million next quarter. This quarter, they did what? They did $458. So they're going to be down quarter over quarter. That's normal. We see that in Q1. That's not the biggest deal in the world. Revenue full year, they're saying $1.93 billion. Okay, so let's do the math. Let's give them the high end, 1.93. This time they did 1.68. So 1.93 minus 1.68 divided by 1.68. Ah, that's why they're down. That's why they're down. They're down because they reduced the revenue growth to 15%. Oh boy, they're taking a beating, dude. They're down 10%. They're going to grow from growing 30% to growing 15%. Yeah, they're basically cutting their growth in half. That's not good. That's not exquisite for a company that's supposed to be a growing SaaS play. Yeah, that'll do it for you, dude. Down 10%. That will absolutely do it for you. That they basically cut their revenue guidance in half, or not guidance in half, but they cut the guidance from where they're growing currently in half. Now, what is the reason they're going to grow at 15% versus 30%? There's got to be some reason that's happening. I mean, that's not really good. Marvell share buyback down 10%. So Marvell is down 10%. Okay, so let's see these guys. I'm going to try to get these guys' numbers. What is going on with these right now? Or Marvell, I'm on their website. Yeah, but Mongo, that's not good guidance, dude. Great numbers on the quarter, horrible guidance. I mean, dude, imagine Palantir said instead of growing 20%, we're going to grow 10%. And Marvell's not even profitable. So that's tough. All right, so we have, Mongo's not even profitable. All right, here's Marvell. I got these guys. And let's look at them. Amit, is your own software presentation after the market open or it's part of that? It's after. So it'll be at 10 a.m. So after we do the market open, then I'll present my software tomorrow at 10 a.m. Okay, so Q4 net revenue, $1.42 billion. Damn, dude. It grew 1% year over year. That is I don't know this company that well, but any company growing 1% year over year does not seem like it's the best growth. They're down 11% now. This is a $73 billion company. They're down 11%. Gross margin, 46.6%. So it seems like this is more in the sense of hardware margins. Marvell declared fourth quarter fiscal revenue of $1.42 billion above the midpoint of guidance. AI drove strong growth in our data center and market revenue, which increased 38% sequentially, 54% year over year. Next quarter, they're expecting to grow $1.15 billion, which is about 5% growth. Gross margin, 44%. That's fine. And GAAP diluted loss per share is expected to be about 0.23 cents. I think this company, are they profitable? No, they're not. Hold on. GAAP net loss, they're not profitable. They lost They lost $392 million, dude. Oh my goodness. 1% year over year seems worse than none, to be honest. Yeah, I'd rather you grow flat than 1%. It's like insulting to grow 1%, dude. Why are these guys not profitable? This is an old company, right? Am I wrong on this? This is not a new company. They've been in the semiconductor space for a while. They produce semiconductors. They've been around since 1995 and $5.92 billion in revenue. Headquarters is in Delaware. 10,000 patents, 7,000 employees. This is not a company that should be not producing a profit. I know they have hardware margins and that makes it hard to produce a profit, but given everything that's going on with AI, you would imagine demand is soaring for these guys, unless they're just like, this is my worst fear about SMCI, that SMCI one day reports numbers that are like Marvell, that is not software margins. They essentially become a commodity with their servers. And then that leads to the street basically being like, well, why the hell should we even care about this company? Even if it's in a space where there's like enormous demand when it comes to AI. Mongo's down 10%. Broadcom is down, but it's barely down. I'm going to pull up their earnings in a second. And let's see what CNBC has, if they have any numbers either. And then we'll do DocuSign, because it seems like DocuSign was another big one. Okay, so we don't have Broadcom yet. So let me pull up DocuSign IR. I've used DocuSign in the past. Let me know in the chat if you used it. It's basically a way to sign documents. That's it. It's a way to sign documents electronically. I never thought this company necessarily should have been public per se. It's not that exciting of a company, but it is a company that, and it's had some issues. People are going to buy it out. I think Kathy had this at one point. She liquidated. So the fact that they're up 15%, their earnings are going to be interesting. Broadcom is down 2.9%. This is a $1,400 stock. They're at $1,300 right now. So they're down $72. They're down 5% now. Okay, they're falling. These guys are falling. This is actually kind of scary because why are these semiconductor plays falling if Nvidia is going up 20% in a week? Like, you don't want to see Nvidia going up this much, but the rest of the sector not really catching up with them. I mean, that's not the best thing to see. All right, I have Broadcom results. I have Broadcom. All right, here we go. Here is Broadcom. Announces first quarter 2024 results and a dividend. So they're giving a divvy. They are giving a divvy. Like Facebook and Salesforce, they are declaring a cash dividend. $11.9 billion of revenue, up 34% year over year. That's incredible. That's really amazing. 34% year over year revenue growth is not a joke. Cash from operations, $4.8 billion. Quarterly common stock dividend of $5.25 a share. Wow. That's not bad. I don't know what the yield is on that yet. It's not incredible, but it's not horrible. They repurchased 7 million shares for $8.2 billion. So they did a share buyback of $8.2 billion. Why is the street tanking them? They bought back their shares. They're giving a dividend and they're growing 34% year over year. What am I missing? It's got to be the guidance. Something. Oh, they already give a dividend? Oh, they already give a dividend. Okay. So it's not, they're not actually declaring a dividend. They're just announcing their dividend. All right. So, wow. Why do they even put that there? Why do I care? They're not increasing the dividend. So like, why is that exciting? Okay. You gave a dividend. Sure. You're supposed to do that. Okay. Let's go to Costco. We'll get back to this, but I'm confused why this one is down so much. They're down now 4%. So it's not as bad as anymore, but they are down. All right. Costco. Let's pull up Costco. Costco. Let's see. Costco. All right, here we go. We got Costco. It looks like no, we don't have Costco. I hate when these companies do this, dude. Look at this. Look at these are the websites. Q2 earnings and results. And then there's no earnings or results. It's like it'll probably take a second to load up. Costco is slightly down after hours. Not enough move yet on the stock to be able to say anything. But we'll keep an eye on it. So nothing yet for Costco. Okay, let me go to Twitter, see if I have anything here. 94 clips says I love Costco. I love Costco too. You know what made me mad though? Costco got rid of the Churro. Costco's now selling you a chocolate chip cookie as the like dessert at the food court. The Churro was the best thing ever. And now it's a cookie. It's like no one cares about the cookie. All right, here's Costco. EPS 392 beat 364 on expectations. Revenue fell $2 billion. Oh boy, that might hurt. Revenues down $2 billion from expectations. As long as their guidance is okay, maybe they can be saved from that. But that's a big miss. If these numbers are correct, that's a big miss on revenue. $2 billion is not the best. Yeah, that's correct. Tiny revenue miss, but nothing too crazy. I saw so much Costco hate on my timeline this week. I guess overpriced is staying overpriced because the stock isn't gapping down. Again, Costco is famous for selling hot dogs for $1.50 with the soda. That's a big revenue miss, though. It's slight, but $2 billion is a decent amount. Yeah, Costco's down after hours. It's down 1%. Let's see if it continues to go down. Marvell, by the way, is down 12%. Big Bear AI is down 16%, folks. Big Bear AI is down 16%. A lot of people have been chasing this stock for the past couple of weeks. I've been seeing it on my timeline as well. It's kind of like another SoundHound, except the valuation is a little bit better than SoundHound. But Big Bear is down. Jenk says, I never had a Churro before. You got to have one. It's like cinnamony. It's like a swirly, it's like swirly dough with cinnamon. It's really good stuff. Cinnamon churros. Everyone has to try it. MongoDB's down 10%. Big Bear's down 14%. Broadcom's now down 2%. It was down 5%. I don't think they should be red after hours. I think they'll end up becoming green. Palantir, by the way, 26.28. So they are getting basically back down to 26 right now. At least that's what it's looking like after hours. Costco down 3%. So Costco's now falling. Am I saying Churro wrong? Why are you guys laughing at how I say Churro? It's a Churro, right? It's a Churro. It's not a Churro. It's a Churro. That's how you say it. DocuSign up 11%. Okay, I'm trying to get DocuSign's numbers, and I'm trying to get some more update on Broadcom. Okay, here we go. Here's CNBC on Broadcom. Let's hear what they have to say, and then let me get DocuSign while we're We're waiting for that. Am I saying it wrong? It's a churro? Churrio? How the hell do you guys say it? Churro? What is this? Cheerio. No, I'm not saying Cheerio. I'm saying churrio, right? That's the difference. It's a churro. Yo, I'm saying it right. You guys are saying it wrong. I'm sorry. I don't. It's okay. Here we go.
Pippa Stevens has the numbers. Pippa.
That's right, John. The stock is tumbling here on weak guidance, but let's start here with Q4 results because it was a top and bottom line beat, with the company earning 86 cents adjusted. That was almost double the 47 cents analysts were looking for. Revenue coming in at 458 million, also ahead of the 433 million expected. But once again, it is that weak Q1 and full year guidance that's pressuring shares. For the full year, they see revs between 1.9 and 1.93 billion, while Wall Street was looking for 2.03 billion. On EPS, they see a range of 227 to 249, well short of the 334 that analysts were looking for. Stock is down almost 8%. Morgan?
All right, Pippa Stevens, thank you. Marvell Technology earnings are out as well. Christina Partsinevelos has those for us.
Yeah, it's good to keep in mind that Marvell is exposed to legacy chips as well as the AI section. So what we're seeing for EPS, it was in line at 46 cents on revenues of 1.427 billion. Q1 guidance, though, was weak, with the company warning we are forecasting soft demand impacting consumer, carrier infrastructure, and enterprise networking in the near term. But we expect revenue declines in these end markets to be behind us after the first quarter, which was that guidance. You can see the stock is down 9%. They did also announce in a separate release a $3 billion buyback, but I'm sure they're going to talk up the impact of AI, because they said that AI drove strong growth in our data center end market revenue, which increased 38% sequentially, 54% year over year. But nonetheless, it's the Q1 guidance and the soft, weak consumer that is concerning, causing the stock to plunge 10%.
Okay, Christina Partsinevelos, thank you. I see you and I got the same wardrobe memo here today, too.
Yeah.
All right, Paul Hickey, since we interrupted you before, want to get your risk.
Okay, so I got DocuSign up right now. After hours, we got Mongo down 10%. We just saw why. Big Bear, we'll talk about them in a second. They're down 18%. Costco's down 3.7%. Not crazy, but they are down. That revenue miss was not pretty. Broadcom down 4%, and then Marvell down 11%. Real quick before we go to DocuSign, we're gonna end this right now, and we're gonna have Google give us the answer. So here's a website for this word that we need to figure out how to present. Here's the audio version of how to say it.
Churro.
That's what I said. I said churro. I said churro, guys. I said churro. I didn't say churrio. I said churro. So I don't know why there was such a fight in the chat. Obviously, I was saying it correctly. But you guys are hard on hearing for some reason. So it is what it is. But it's churro for those that were saying churrio. I don't know why you thought there was an I in it. There was no I in it. It was churro. So and I'm sorry that you guys didn't get it right. Okay, DocuSign, 27% year over year, no, 8% year over year growth, 712 million, 883 million in billings, 25% operating margin, 249 million in free cash flow. Those are the headline numbers. This presentation is nothing else that's that interesting. They've increased their customer count, 19% year over year international revenue growth, 27% of total revenue. Is their growth. 180 countries around the world. Yeah, I guess the street just liked the numbers. The stock has been beaten up pretty badly. So they're going 8% year over year. I don't know why the stock is up 13%, but the stock has been beaten up like aggressively. It was at 200 at one point. So maybe the street was like, all right, there's nowhere else for it to go. It's not a fast growing company. Year over year growth is at 13% with billings, which is good, but it's not great. And so that's why DocuSign, I guess, is up for those that have DocuSign. I guess for those that have DocuSign, that's what we got. Jess said you said Cheerio like an uncultured ape. All right. Maybe I said it with an I. Maybe I said Cheerio. But it's churro. And unless you have proof that I said Cheerio, then it's churro. And maybe I said it, but maybe also you guys heard differently. Like everyone I'm tired of the lack of personal accountability, dude. Everyone wants to blame everybody else. So before blaming me, maybe you want to listen to yourself and how you're perceiving the world before you just go to blame people on how they say stuff. You know, this is the problem with America in particular. We're so entitled. All right, Big Bear down 17%. I'm just kidding. I said it wrong. I get it. I said it wrong. It's this thing with words, dude. I don't know why I'm so bad. I'm like okay at talking, you know? I have a communications consulting firm where I teach people how to talk. But when it comes to like saying these unique words, I just don't know how to say them. I always mess up. All right, Big Bear. I'm trying to find their results. Okay, here we go. I got the results. Big Bear. Are these the results? Big Bear. Yeah, here we go. Here's the results. All right, here we go. This should be March 7th, 2024. Big Bear. Here we go. Surge, thank you for the gifted membership. Anyone can claim that right now. That's a $5 a month subscription to the channel. Thank you so much for that subscription. All right, so Big Bear announces a closing of an acquisition for $54 million, net loss of $21 million, so they're not profitable. Second consecutive quarter of positive adjusted EBITDA. As soon as you see second consecutive quarter of positive adjusted EBITDA, you know the earnings are about to be shit. Because in the words of Charlie Munger, any company that cares about adjusted EBITDA is essentially caring about bullshit. So there you go. Adjusted EBITDA in the headline. If any company you follow ever says, hey, in the headline of the earnings, we have positive adjusted EBITDA, yeah, you're not going to have a good earnings. 2024 revenue outlook of 195 to 215 million, 3.7 million adjusted EBITDA, net loss of 21 million, approximately 54 million in cash. Revenue, wow. Dude, the revenue is growing 0.5%. That's not the best. Gross margin of 32%, net loss of 21 million. Reoccurring SG&A has been reduced from 16.1 million to 12 million, ending cash balance of 32.6 million. Yeah, the reason the stock's down 18% is because the growth sucks. Or at least the growth is not as substantial as what the street wanted it to be. That's why the stock is down right now. BBAI stock, let me give you guys a look at what this stock looks like. BBAI, and then I'll pull up Costco. So year to date, this thing is up 88%. So it had high expectations to live up to, even though it's a market cap of under $1 billion. It's a small cap. 6 months, it's up 122%. 1 month, it's up 118%. And in the past 5 days, it's up 12%. So yeah, it was definitely baked in terms of expectations. Right now, after hours, they're down 17%. The growth is really not there, and they're not the premier AI play like a Palantir. Palantir, by the way, 2610, it's down 1.36% after hours right now. Costco down almost 5%. All right, so let me pull up the Costco numbers. Here's what we're looking at on Costco, down 4.5%. Let me pull up Costco. They should have refreshed the screen. I should be able to see the financials. Let's see what we got. Let's see how many Cheerios is Costco selling. Here we go. I got the numbers. Time to see how many Cheerios Costco is selling. Am I saying Cheerios to annoy you guys now? Maybe. Just maybe. All right, here we go. Costco. Net sales for the quarter increased 5.7% to 57 billion from 54 billion, but they're down from 59 billion for expectations. So that's what has the street a little upset. Net income was 1.7 billion. All right. I think also Costco is doing Costco definitely has a dividend. And last time they declared a special dividend of like $15 a share. That was like last earnings, I believe. So Costco definitely has it. Yeah, here we go. Costco did a 15 per share special dividend last quarter. Net income for the first 24 weeks was 3.3 billion. That's fine. US is this is for comparable sales. US is up 3.4%, Canada 8.4%, and other international 10.2%. E-commerce is up 16%. Their e-commerce business is growing pretty nicely. Costco becoming a bigger e-commerce player as well. They missed on revenue, correct? They missed on revenue. Did they mention Cheerio in the call? Dude, I just command F Cheerio. If they mention Cheerio, that would be hilarious, dude. That would be amazing. Imagine if the CEO gets on the call today and he talks about the Cheerios. I would be dying, and all of you guys would have to eat your words if the CEO of Costco is calling it a Cheerio, okay? Like all of you. Dictionary.com would have to eat their words as well. Costco's in 875 warehouses, 603 in the United States, 180 in Canada. Membership fees. Let's look at this. Membership fees. Total revenue from that, or membership fees, 1 billion in the past 12 weeks. In the past 24 weeks, it looks like they did about 2 billion. So for 24 weeks, for the past year, they did 114 billion in sales, 2 billion in membership revenue, 116 billion in total sales, 58 billion in total revenue as well. And they've got 9 billion in cash. Yeah, it's not a bad quarter. It's just the stocks run up a lot over the past year, and they have that special dividend, and they missed on revenue. So they're down 4%, but it's not an aggressive 4% down. It's not it's not as bad as Big Bear, down 13%. Mongo down 11%. DocuSign is the winner today. They're up 12%. And Broadcom down 3%. Broadcom was down almost 6%. Now they're not down as much as they were before, but they were down before. All right, so here we got some more earnings updates as well on Big Bear. Let's take a look at this. Here we go.
I'm sorry now, because I can. All right, let's go for it. What's the stock doing after hours? Can we put that up? Samsara, ticker IOT. It is a beat both on the top and bottom lines. Yeah, that would explain it. It's a moving higher. Revenue came in at 276.3 million versus 258.3 expected. Non-GAAP EPS at 4 cents versus 3 cents expected. The guide for Q1, they're guiding to revenue of 272 million at the midpoint, with 266.8 expected. Also on EPS, guiding to a range of 0 to negative penny per share versus a penny loss expected. Also, the full year guide is ahead of expectations, guiding to 1.186 to 1.196 billion dollars versus 1.18, little a hair shy of that expected, and earnings per share of 10 cents at the midpoint versus 8 cents expected. That explains why the stock, Morgan, is up better than 10% in overtime.
All right.
Oh, I should mention, yes, exclusive tomorrow. Samsara's CEO, Sanjit Biswas, that's tomorrow on overtime.
All right. So tune in tomorrow.
Those Broadcom results with Christina Partsinevelos. Christina.
Well, so far, we're just going to look at the Q1 results. EPS beat, 70-cent beat, $10.99 adjusted on revenues of $11.96 billion. The company said they're pleased with their 2 strong drivers of revenue growth, and that would be the VMware acquisition that's helping drive software, and then, of course, AI demand for their AI data centers and custom AI accelerators. But you can see the shares are dropping about almost 8%. So I'll go through the guidance and get back to you.
All right, Christina, we'll be back to you for more on that. Mike, I don't know if you have an initial reaction to that. Broadcom is one of those names, kind of like Mongo.
All right, so those are sort of the main earnings we're looking at right now. Is Grindr having earnings today? Grindr having earnings? Grindr earnings. Do they have earnings as well? Did I miss that? Grindr investor relations. News. Oh, yeah, they did have earnings. All right, folks. So now we got to look at Grindr. What is their ticker? GREND. Let me look at their stock. Grindr. This is the adult dating app, particularly for gay people. So that's what Grindr is for. They are publicly traded, correct? All right, here we go. Grindr. Full year revenue, 260 million. Operating income, 55 million. Net loss margin of 21%. So they're not profitable. 121 billion chats were sent. Wow. That's a lot of people talking. Revenue from paying users up 38%. Guidance of 23% or greater revenue growth with 40% adjusted EBITDA. Their stock is up 8% after hours. The stock is worth $1.75. The volume today was 122,000. This is a very small company and definitely a small market cap as well. CEO, the Grindr team delivered an outstanding full year as a public company. Our results came in well ahead of our financial guidance. We generated solid growth in paying users, supported by the launch of Weeklies, our popular weekly subscription product, and we drove best-in-class user engagement through our improved user experience. We've entered 2024 with strong momentum, and we are excited about the day ahead with a robust product roadmap and growing team. We look forward to sharing more about our plans in Investor Day in June. Okay, so Grindr. If anyone is investing in Grindr, you are up today 8%. There you go. Grindr up 8%. The ticker symbol, I think you're allowed. It's GRND. That's what it looks like. GRND. Let me make sure. See if it's even on Robinhood. GRND. Yeah, it's on Robinhood. Yeah, you could buy it. Okay. Grindr it's 9:50 after hours. Oh, I think this is, hold on. Weeble's showing the wrong one. Am I looking at the wrong one? Yeah, here it is. Sorry, guys. I'm looking at the wrong one. Okay, so Grindr is a $1.52 billion company. Volume today was 1.3 million. 9:50 after hours, 870 on the day. It was up 6% on the day. Now it's up 9% after hours. So it's up 15% today. So Grindr, that's up 15%. So there you go. Congrats to Grindr Bulls. You got it. You got, I mean, look, at the end of the day, I think it's a better market than Tinder because it's more targeted. You have an audience that is actually like willing to pay, because if you're targeting a niche audience, there might not be as many solutions for what they're looking for. And if Tinder is not the best, I know on Tinder you can select the same gender or whatever, but it's different if there's a dedicated app for that. So I mean, if they have a very specific application, then boom, there you go. That's what gets them to go. So that's Grindr, and that's what we got. Costco earnings. We're gonna listen to it live. I believe it's going to be at I'm on the webcast right now. It's gonna be at 5 p.m. Okay, so we have 20 minutes. It's gonna be at 5 p.m. Okay, I want to do a quick experiment, guys, because I've been thinking about this for the past 2 days, and I don't believe it, but I want to do a quick experiment, just real quick, to see if this is actually true. So on Twitter right now, on YouTube, I'm looking at my YouTube, and it says we have 786 people watching, which is phenomenal, and I'm very thankful for that. On Twitter, it says we have 1.4 thousand. I kind of don't believe that we actually have 1.4 thousand on Twitter. So if you're watching on Twitter, if you could be so kind to just type something in the chat, because even for the past 2 days, Twitter has usurped YouTube in terms of people watching the stream by a factor of almost 2x. And I just don't think Twitter can deliver those types of results. And I kind of feel like Elon's juicing the numbers. And maybe I'm totally wrong about this and I'm just being an imposter and I'm doubting that there's that many people here. But I kind of don't believe that there's that many people there. So if you're on Twitter and you could just send some messages so we can kind of realize that there actually are 1.4 thousand. Because, dude, I just don't think Twitter has that type of reach the same way YouTube has when it comes to being people watching on live. Either I'm wrong or there's a punch. So if you're on Twitter, please say you're on Twitter. I would love to just make, all right, so we got Raj on Twitter, Nana, Matt, X-Tweet, ET, you don't count. You just went on Twitter for that. Because I don't know, dude, it kind of, look, it went to 1.5. I'm like, is Twitter really getting 1,500 people? I just don't think, like, dude, I don't want to say Elon's inflating it, but we've never had 1,000 people on Twitter. Like for aipcon, I understand because it's aipcon. But yesterday in the morning, dude, there were 2,500 people watching me listen to Jerome Powell's testimony. And I know people are interested in Jerome Powell, but 2,500 is a lot of people. So yeah, I mean, like if there's a lot of people on Twitter, that's great. I'm very thankful for that. That's amazing. And I do believe in myself. I believe in the growth and everything we're doing here, but dude, that's a lot of people. And I just didn't think Twitter has that level of growth when it comes to live in particular. So yeah, if you are on Twitter, thank you for being here on Twitter. And there's no way we can confirm this because Twitter doesn't have analytics. So I'm literally just trusting that this number is true. And I'm like, all right, there you go. We got more people on Twitter. Charlie says, I watch you every morning on Twitter. I know there's a bunch of people that watch. I'm just like, at this point, I'm like, all right, there's actually 1,000 people. And like Twitter usually doesn't have the best reach for going live. So if there are, thank you for being here on Twitter. That's awesome. And that's great. Sir Captain King says, I recommend your channel to everyone in the Detroit auto industry needing to invest their big union. Wow, that's amazing. All right, that's awesome. That's good. That's good. It is views, not viewing. But what Twitter's showing me is that it's 1.5K. Like, let me show you guys. Let me show you guys on the iPad. Let me show you this. See, look at what I'm looking at right here. You see how this says 1.5K right there? 1.5K. That to me is 1.5 thousand people live, not 1.5 thousand people watching. I mean, that have watched. And I saw it this morning and I was like, I don't think this is true, dude. Like, I don't know if Twitter, like, look at this. Let me show you the screen. But if it is, then shit, YouTube's got some competition, dude. That means this is better than YouTube, dude. Look at that, 1,565 viewers live. That's way better than YouTube. That's way better than YouTube. That's amazing. So maybe the boost with your blue check on premium, yeah, maybe that is what allowed it to get there. I mean, look, Twitter's, I guess, recommending it to more people. That's for sure. So, all right. So we've got Costco in, what do we have? Costco in about 20 minutes. Let's get an update on what the hell is going on with Google and search. Obviously, they've had a pretty rough week, and they've not necessarily been in the best situation in regards to AI and how the market is conceptualizing AI. So let's get an update on what's happening with Google. Bhaskar says Wise Palantir down a lot in the afternoon, 26.25. I mean, it ran up to 27.44. People took their profits. aipcon was nothing so exciting. It was really good, but it wasn't like, they're working with SpaceX or something to get the street to buy it up. So it's still up 10% for the week. but it is, it's going to sell off. People took some profits, and that's probably okay. All right, here we go. Here's an update on what's happening with Google and their search business.
Google positive today, but underperforming on the year, down almost 4% amid concerns over threats to its core search business. But one executive there is now tamping down those fears. Deirdre Bosa has the story in today's Tech Check. Hi, Dee.
Hey, Tyler. So we got an update on the status and the resilience of search that could make the bears think twice. And there are a lot of bears these days. It was Alphabet's chief business officer, Philip Schindler. He spoke at Morgan Stanley's TMT conference just down the street from us here in San Francisco. And for all of those fears around other chatbots eating Google's lunch, he said that they've actually seen positive search query growth in all major markets over the last 12 months. And that as they experiment with SGE or search generative experience, that's like their chatbot light within traditional search. He said that they're still running ads above and below those results. So instead of this idea or fear that Google is going to cannibalize their cash cow search ads, they're incorporating Gen AI products into that business. So the big question, of course, so what does that look like in the future? Well, Schindler said that he sees a world where there are Gen AI-based ads, as he calls them, integrated into generative AI answers. He believes that Google can create consumer and advertiser value over time by making ads more like commercial experiences. So they're thinking about it in a different way. And of course, the big advantage that they have is distribution, right? It's been rolling out generative AI features to billions of users already, maybe more accurate to say hundreds of millions of users, many of whom aren't actually looking for chatbots, but maybe getting more familiar with them nonetheless. And Tyler and Courtney, I don't know if you've noticed some of these features. When you do Google searches, you have to opt in, but it'll show you, it'll give you like a little Gen AI answer. Have you noticed that?
I haven't noticed that. That is interesting. It looks differently when it's a Gen AI answer?
So sometimes it shows up as a box and it tries to answer your question directly like it would in a chat, but sometimes it's a button that says, would you like to see a generative AI? Here, we've got a video of it right here. So look out for, and I guess this is kind of like the bull and the bear case, right? Is that you have to maybe be looking for it, but the other case is that you're not looking for it, but you're getting comfortable with this kind of search. You may not even know it. And that's what it's all about, right? These changing habits right now and whether Google is going to be left behind.
Dude, Google needs to make money off generative AI. And right now, I don't think they're necessarily making money, which is why they're scared. And that's why the market is pricing them in that direction. Let's get an update on Costco earnings right here.
From the company's campus in Austin, Texas. Now, we met for time, but just over 4% at the moment after missing revenue estimates when they reported just moments ago. Joining us now to discuss is Arun Sundaram, Senior Equity Research Analyst at CFRA Research. Arun, this is a name that's been running quite strong. Expectations are high. Is there a problem here?
Yeah. Hey, John. No, I didn't see any problem with this report. I actually thought it was a pretty good, earnings. Comp sales are up 5.8%. That's excluding fuel. That's actually a step up from their fiscal first quarter of 3.9%. Membership fee income was up 8%. I think that's a solid number. You saw strong digital or e-commerce sales growth as well. The stock is run up a lot recently, so I think expectations were really high. So you just really needed a really strong earnings to support this rich valuation. While the results were good, if I was going to be nitpicky, we did see, operating margins were about 3.6%. We were expecting about 3.7% operating margins.
Okay, so his analysis is the same as mine. My analysis was the stock has run up a lot. So unless they smash, they were going to get beaten up. And they didn't even get, like 4% down is not beaten up. So that's what happened. His analysis is not that different from what I said. The stock has been richly valued. It deserved the rich valuation, but it has been richly valued. And they missed by $2 billion. So they got hit after earnings. That's it. Pretty simple stuff. Nothing too crazy on Costco. Is Broadcom's earnings out? Yeah, Broadcom's earnings are out. They are down after hours as well. I think they've recovered a little bit though. Let's see where they're at. Yeah, they're down 3.84%. They were down about 7%. So it's not, the worst thing. The thing about Broadcom is they bought back their shares, continuing to do the dividend. They're growing nicely. I don't know exactly what the street is upset about. It seems like that forward guidance is just not enough for the street to get excited. And that's why it's not the best. John says, Amit, will the product launching tomorrow be beneficial for newer Palantir investors? 1000%. Whether you're an OG Palantir investor or you're a brand new Palantir investor, you're someone who just got into Palantir, the product tomorrow at 10 a.m., I think anyone who cares about Palantir will benefit from it. And then hopefully it's just cheap enough for people to not worry about the cost and just continue to enjoy getting the value from it. But I think everyone will like it if they use it. Membership is expiring tomorrow. Should I renew or get the Palantir app? Get the Palantir app. The membership on the channel, guys don't get anything if you join the channel. Like I don't do exclusive content because I give all my content for free. I've never been a fan of like paywalling content. It's just never been exciting to me. So yeah, I would get the Palantir app instead. Don't worry about being a member to the channel because the channel really doesn't offer that much other than my raw humor that you get for free every day. There's nothing unique to the membership of the channel. All right, so we got about 15 minutes until Mr. Costco, or Mr. Churio Seller, as I should call them, begins to talk. Let's listen to Actually, no, let's do this. Let's do S&P 500 ending on record highs, and then we'll get a little bit from JPow, who did testify in Congress today again and didn't really say anything that interesting. Here we go.
Talk of the tape. Can it stay this easy for much longer? Let's ask Cameron Dawson, New Edge Wealth Chief Investment Officer, and Virtus Investment Partners, Joe Terranova, a CNBC contributor, of course. So, that kind of lays it out. I mean, if you were just looking, Cameron, at the behavior of the market, it got overbought and it's staying that way. That's usually a sign of a pretty durable rally. You're seeing this broadening action that we saw. And then with stocks at record highs, credit spreads tight, the economy looking okay, you have the Fed not doing anything to say, stop thinking about rate cuts. So I think it's one of those situations where, is the only bear case that there's no bear case?
Yeah, probably. I mean, right now, growth and the Fed aren't giving the market any reason to pause this momentum. If those things were to change, yeah, maybe you would see some digestion. But to your point, you're still seeing this chase into the market, and something that we're watching closely because positioning is extended, but not at extremes, which just means that dips are getting bought and you still have the chase to get people invested. Eventually, everybody will be on the same side of the boat, and that's where we'll really have to watch positioning, sentiment, valuations all be extended.
For sure. And even this little one-day pullback, Joe, that we got, it was just one day. And this has been the pattern for a while right now. We had 1% down on Tuesday. It got picked up, and so the dip buyers are getting rewarded immediately. So that's just self-reinforcing here. And it reminds me a bit of the beginnings of 2013, 2017. And that was where you had this acceptance of the bullish consensus about the economy and about the markets. 2013, you broke to your first record high in 13 years. 2017, it was going to be tax cuts and a revitalization of the economy. And then the market kept going, even though it felt like it had to pull back. So that's not a prediction, but that's an observation.
Well, it's also, remember, what set the stage for all of this was a reversal in fundamentals.
Sure.
Coming into 2023, you were in the middle of an earnings recession. You carried that into the fall for the S&P 500. You had an adversarial Federal Reserve that really didn't step back from the disposition until December. So that set the foundation for an environment which overwhelmingly bearish sentiment was still dictating that positions sit in those cash yielding equivalents. And what you foster from that is a very strong technical rally. And I think it's important to understand a lot of times when you break out from a significant high, and the January 22 high was significant, not so much in terms of price, but in terms of the duration in which you didn't revisit it once again, nearly 2 years. Once you break out for that, the bearish argument is, well, you'll potentially get a failed breakout. This was the complete opposite of that. You're 6% above that breakout high. This is a powerful, momentum-driven rally.
I agree. We are much further above that previous all-time high, which at least establishes the reason we are that high is because of these earnings numbers. And as a result of that, it's hard to argue that this is one of those it just doesn't feel like 2021 because we don't see the ultra insane speculation and we don't see the egregious unprofitable companies, i.e. SPACs, right? Chamath literally made billions of dollars by taking these stupid companies public. SoFi being one of the companies that was not the stupid companies, and getting ridiculous valuations. We don't see that. And if we don't see that, I think that this is a much more unique rally that's happening in the context of the broader market. For AIP, we didn't see actual demos at the conference. We saw presentations. The people that are seeing demos are the people that are at the literal boot camps or the literal conference. So they're seeing those demos in their booths. Maybe Palantir will post some of those videos online afterwards, but at the conference, we just got high-level presentations, not any specific demos. Do you guys want to see Karp talking on Bloomberg? Have you guys seen it already or no? Because we have the Karp interview now on Bloomberg. Let me know in the chat. Do we want to see it? And for those that seen it, do you want to just listen to Karp talk again? We got to about 7 minutes of it on the live stream. So let me know if you guys want to see that. We got Costco in 9 minutes. And then we will listen to the earnings. Yeah, guys, I definitely think the Twitter numbers are inflated, dude. I really don't think there's 1,700 people watching live on Twitter. I don't believe that. I really think Elon's juicing it, dude. I really do not think that we could barely get 100 people over the past month on Twitter at the same time as YouTube. You're telling me we 10x that, almost 20x that in a day? There's no way, dude. That's weird. All right, let's put up Karp. I know there's people watching on Twitter. I don't know if that number is necessarily correct. And if it is, that's amazing, but I'm not sure. Okay, here we go. Here is Karp on Bloomberg today.
Palantir CEO Alex Karp, thank you for having us at another aipcon. I think the big news of the week is Titan. And when I think about your relationship in particular with the Pentagon since 2016, frame Titan as how much progress you feel you've made serving that part of our government.
Well, look, I'm very exquisitely happy about how well we're doing, both in the government and commercially. But the most important change in the U.S. government has nothing to do with Palantir. When we started building this company, the idea that software would power intelligence, warfighting, general health issues was viewed as something esoteric, scandalous, obviously questionable. The idea that America's premier advantage would be software was viewed as also esoteric, academic, self-serving. And every institution in America, and especially the Pentagon, have begun to come to terms with the idea, the reality that hardware-driven systems purely are inferior to software-driven hardware systems. And beyond that, our adversaries are as good or better at building hardware systems and have a deficit in building software.
But what is different about Titan as compared to, say, Maven, is that you are entering new relationships with other hardware providers, right? Like Anduril is one example. Explain how that is working in this case.
Look, actually, I see this as a commonality. America needs to establish dominance on the battlefield. Maven, what's publicly known about Maven, is one of these projects that actually took what America's the best at in the world, software, and put it in the hands of our warfighter. By the way, at enormous costs. You're sitting in Palo Alto. I had people protesting here, hundreds, putting up chains in front of our office, calling us Nazis because we were dedicated to serving the American people, because we had the sense God gave a goat, and we realized that if you're going to do really important things in this country, you should defend this country with every asset we have. And what really happened on the Silicon Valley side is that you got, because of that success, because of the power of it, and quite frankly, because of our success, people realize this is a place where you should invest and make America even stronger. And what happened is you got a whole ecosystem of defense startups and an ecosystem of people inside the Pentagon who are ready to embrace that are doing things, by the way, that are very similar to what's happening in the commercial space. And what are those things? We're going to look at software not off PowerPoints. We're going to buy software from people who've actually sold software commercially. And what's unique about Titan is not the difference, it's the logical extension. And what is that logical extension? People who've built software products that have been used on the battlefield and used commercially. You have to ask yourself a question. If your software is so good, why have you not sold it commercially and made yourself billions of dollars? So that simple insight, which you see in the battlefield in Ukraine, which you see in Israel, is something that is hard for institutions to internalize. The Pentagon, this step is one of the most historic steps ever, because what it basically says is, we're going to fight for real. We are going to put the best on the battlefield. And what is the best? The best is not just not one company. It's a team of people led by the most prominent software provider in defense in the world, Palantir.
There's something you said there, that inside the Pentagon, people are ready for this. Bloomberg did some quite deep reporting on the use of Maven specifically in 2024 so far, and the complaint from operators in the context that it's used for targeting is that it's still not quite there. It's still, but I'm just offering you an opportunity to respond to that
I'm
logic.
not going to respond because I'd have to tell you all sorts of things. There is no one by the way, that was a long and very important article. Everyone should read it. The way I read the article was, this is the most important thing, one of the most important things the Pentagon has done in decades.
Right.
I can tell you the way our adversaries see Maven and our friends is like, what the F? How did they actually produce this? And I tell you what the average citizen reads that article is like, thank God we're spending money on things that are more valuable than what we're investing in. And to go into more detail, you have to go to all sorts of classifieds. That program is one of the shining stars of what this country has done. And it serves as a template for, we're going on the offense, we are going to assert dominance, and we're going to negotiate after we're the best in the world.
Alex, I host a technology show, and I want to talk about the technology, its current capabilities and where it can go. Is that platform ready to move from assisting in targeting, which is intelligence basically, to giving more information? The article also looked at the idea that there is a hope from intelligence services and the US government that it can be one day in a position to recommend which weapon to use, to give more tactical advice.
Let me give you commercial examples, because I can't go into what it can do and what it can't do. I can tell you what we're doing commercially.
Please.
Right now, you're going to see a normal non-engineer sitting at their terminal, tasking satellites, exporting a logic inside the security model of the company to figure out which satellites should be over which part of their agricultural assets and what should happen based on weather conditions. Now, you can just imagine how you could do that with a weapon system. This is exactly what Palantir commercial, not Palantir highly classified environment. Palantir with somebody that has been hired 5 days ago, that can't write code, that's very smart, may not speak English, and is just entered the enterprise, is doing that workflow. That is happening right now. And that is why this revolution, which is highly confusing. It's highly confusing.
It is.
Yeah, it's confusing because a lot of the stuff is BS. Then there's the poetry side of it. I love poetry. If I could go read more poetry, I would. Enterprises don't need more poetry.
BS, you mean what?
Well, it's like, I don't know, somebody delivers PowerPoint. We're going to give you, it's like, look, everybody has to try to sell something. If you don't have something to sell, you sell words right now. So you're selling something that doesn't work, can't work. You're explaining to your enterprise, you can't have the car you want, which is honestly Palantir, but you can have the car you don't want because this and this and this and this, and you have to buy it. And that's by the way, that is a plague on many societies, less so America. There is this problem in Europe that there's really no high-end software vendors. Luckily, our adversaries have this problem.
And you've spoken about your frustrations with Europe not being more adoptive.
Well, I spent half my life in Europe. I want the West to win. So but it's a confusing revolution. If you're sitting there and you're sitting in a society that has led industrial revolutions for hundreds of years, and all of a sudden the industrial revolution is happening basically in one place, and that's right here. That's confusing. It's confusing because 3 vendors are saying they're going to offer the same thing. One thing is like, I'm going to explain to you why this doesn't work. You have to buy our BS thing. The other's like, oh, it does work, but it's only poetry. And then there's a third category, which judges by the fruits we provide, which is exactly what we're doing, which is like, great, we're not going to argue about this part of our product, that part of our product. I'm happy to explain it to somebody who's technical. We're going to show you what happens in 4 to 6 hours, as opposed to what happened in your whole enterprise over the last 2 years.
We will talk about the commercial business. We will talk about boot camps. But let me just...
we can talk about whatever you want.
But a final point, you talked about the confusion of the revolution, okay? Today probably will be the first time that a president says artificial intelligence in a State of the Union speech. So it's a very simple question. What is your summary of this administration's leadership, so to speak, of the US in the context of AI?
It's very helpful if you spend a lot of time abroad. Because like, if you look at this internally, like internally in America, there's a long list of criticisms that you could make of anyone. This country is the dominant country with no second country in the world. So whatever we're doing, it's working out pretty damn well. So it's like, could we be better? Could we have better regulation? Could we understand these things better? But again, we are dealing with a revolution. That's one of the really confusing things, again, for Americans. Like, normally you have a revolution and multiple countries are participating. This is a revolution where the technology is being produced in America, mostly in Silicon Valley.
But you do have multiple customers, so just...
All right, Costco starting.
Corporation fiscal second quarter 2024 earnings call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star followed by the number one on your telephone keypad. If you would like to withdraw your question, again, press the star one. I would now like to turn the conference over to Richard Galanti, CFO. Please go ahead.
Thank you, Denis, and good afternoon to everyone. I will start by stating that these discussions will include forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. These statements involve risks and uncertainties that may cause actual events, results, and/or performance to differ materially from those indicated by such statements. The risks and uncertainties include, but are not limited to, those outlined in today's call, as well as other risks identified from time to time in the company's public statements and reports filed with the SEC. Forward-looking statements speak only as of the date they are made, and the company does not undertake or to update these statements except as required by law. Comparable sales and comparable sales excluding impacts from changes in gasoline prices and foreign exchange are intended as supplemental information and are not a substitute for net sales presented in accordance with GAAP. In today's press release, we reported operating results for the second quarter of fiscal 24, the 12 weeks ended February 18th, as well as February retail sales for the 4 weeks ended this past Sunday, March 3rd. Reported net income for the 12-week second quarter came in at $1.743 billion, or $3.92 per diluted share, up from $1.466 billion, or $3.30 per diluted share in the 12-week second quarter last year. This year's results included a tax benefit of $94 million, or 21 cents per diluted share, due to the deductibility of the $15 per share special dividend to the extent received by our employee 401k plan participants. Net sales for the second quarter were $57.33 billion, an increase of 5.7% from the $54.24 billion in the second quarter last year. Net sales were negatively impacted by approximately 1.5% in the U.S. and worldwide from the shift of the fiscal calendar as a result of the 53-week 2023 fiscal year. The following comparable sales reflect comparable locations year over year and comparable retail weeks. In the U.S., we reported a 4.3% comparable, excluding gas deflation and FX. The 4.3 would have been a 4.8. Canada reported comp of for the quarter 9.2%, 9.0 ex gas and FX. Other international 8.6 and 8.2 ex gas and FX. Total company 5.6 reported for the quarter and a 5.8% excluding gas deflation and FX. E-commerce was an 18.4% reported and an 18.2% excluding FX. In terms of second quarter comp sales metrics, our traffic or shopping frequency increased by 5.3% worldwide and 4.3% in the U.S. Our average transaction or ticket was up 0.3% worldwide and up 0.1% in the U.S. And foreign currencies relative to the U.S. dollar positively impact sales by approximately 0.2%, while gasoline price deflation negatively impacted sales by approximately 0.4% minus. Moving down the income statement to membership fee income, we reported membership fee income of $1,111 million, up $84 million, or up 8.2% year over year in the quarter. In terms of renewal rates at second quarter end, our U.S. and Canada renewal rate came in at 92.9%, which is up 0.1% from Q1 end 12 weeks earlier, and the worldwide rate came in also at 90.5%, similar to the last quarter. Membership growth continues. We ended the second quarter with 73.4 million paid household members, up 7.8% versus last year, and 132.0 million cardholders, up 7.3%, with continuing growth throughout the quarters. At Q2 end, we had 33.9 million paid executive members, an increase of 646,000 during the 12-week second quarter. Executive members represent a little over 46% of paid members and a little over 73% of worldwide sales. Moving down the income statement line next to the gross margin. Our reported gross margin in the second quarter was higher year over year by 8 basis points, coming in at 10.80%, compared to 10.72% last year in the quarter, and up 4 basis points excluding gas deflation. Writing down the little matrix that we usually do with 2 columns, both reported and excluding gas deflation. First line item is core merchandise, plus 5 basis points year over year on a reported basis, and plus 2 ex deflation, gas deflation. Ancillary and other, plus 7 and plus 6. 2% reward, minus 7 and minus 7. LIFO, plus 3 and plus 3. And all told, total reported, again, gross margin year over year up 8 basis points and up 4, excluding gas deflation. In terms of the core margin on their own sales, again, while the number I just read you was a plus 5%, plus 5 basis points and plus 2 ex gas deflation. In terms of core margin on their own sales, our core and core margins were up 25 basis points year over year, with food and sundries and non-foods being positive year over year and fresh being negative. Ancillary and other businesses gross margin were higher by 7 basis points and higher by 6 ex gas. The increase year over year was driven largely by e-com and partially offset by gas. 2% reward, again, higher 7 basis points, lower 7 basis points, both with and without gas deflation, with higher sales penetration coming from our executive members. LIFO plus 3 basis points. We had a $14 million LIFO credit in the second quarter this year, compared to no LIFO charge or credit in the second quarter of last year. Moving to SG&A, our reported SG&A in the second quarter was higher year over year by 3 basis points, or a minus 3 would be higher, coming in at this year at 9.14% compared to last year's 9.11%. And the higher 0.3 would have been lower by 1 basis point excluding gas deflation. In terms of Q2 year over year, the operations component of SG&A, doing the matrix, was 11 basis points higher, or minus 11. Ex gas deflation, minus 8, so 8 basis points higher. Central, plus 4 and plus 5 basis points. Stock compensation, plus 4 and plus 4. And total would be 3 basis points higher year over year and plus 1 basis point, or 1 basis point lower year over year, or better. And with regard to the operations component being higher by 11 reported and 8 excluding deflation, as compared to a year ago, since during the past year, we included last March's extra top of scale increase in wages, which was about a 2 basis point hit to the SG&A line. As well, in the first quarter of this year, we raised the starting wage in the U.S. and Canada. We estimate the impact of that new wage also was a roughly 2 basis points. So about 4 basis points of that 8, or 4 basis points of that 11 were related to those 2 wage increases, more than normal. Below the operating income line, Central I mentioned was better by 4 and 5 basis points, and the rest was pretty much straightforward. Below the operating income line, interest expense was $41 million this year versus $34 million last year. And interest income and other for the quarter was higher by $102 million year over year. This was driven by an increase in interest income due to higher interest rates and higher average cash balances, as well as FX, which was favorable versus last year. We'll see less benefit from interest income going forward following the January payment of the $6.7 billion special dividend. In terms of income taxes, our tax rate in the second quarter came in at 22.1%, compared to 26.1% in Q2 last year. As discussed earlier, this year's rate benefited from the tax deductibility of a special dividend paid to 401k participants. The fiscal 24 effective tax rate, including discrete items, is currently projected to be in the 26 to 27% range. And excluding the special dividend tax benefiting Q2, our Q2 tax rate, instead of being coming in at 22.1%, would have been 26.3%. Overall, reported net income was up 18.9% in the quarter on a reported basis. And again, excluding the special dividend related income tax benefit, it would have been up 12.5% year over year. A few other items of note. In terms of openings, in the second quarter, we opened 4 net new warehouses, including 3 new locations in the U.S. Actually, 2 of them were Costco business centers and 1 new Costco wholesale warehouse, and 1 unit in our 6th in China in mid-January in Shenzhen. That's our 6th in China. There's been a lot of press about it. We have an estimated 10,000 people were at opening, and there are just under 200,000 members currently, including more than 20,000 members who signed up from Hong Kong. And we've seen all kinds of things over there, from tour agencies doing bus trips over to shop. For the full year 24, we estimate 30 total openings, including 2 reloads, so for a net increase of 28 new units. And that puts the remainder of fiscal 24 for Q3 and 4. We plan on opening a total of 15 net new locations, 11 in the US, 2 in Japan, and 1 each in Korea and China. Regarding CapEx, fiscal second quarter spend was approximately $1.03 billion, and for the year it remains in the north of 4.4 to 4.6 million, in that range. One additional comment on China. This past Monday, we launched in our Pudong, China location the ability for our members to order online about 400 items from our items to be delivered that day. This and the delivery will be within about an 8-kilometer radius of the warehouse itself. It's getting a lot of social media attention over there, and we plan to launch it in the other 4 Shanghai area locations by month end, as well as in Shenzhen sometime the following month. In terms of e-commerce, e-commerce sales in Q2 ex-FX increased 18.2%. E-com showed strength in several areas, led by sales of gold and very recently silver. As well, appliances were very, very strong, as was gift cards and e-tickets. As well, Costco Logistics enjoyed record-breaking deliveries. Many of those items are sold via e-commerce. In Q2 of 24, we completed over 1 million deliveries, up 28% versus Q2 a year ago. In terms of e-commerce sales over the past few months, we believe we've done a much better job explaining to our members the significant value propositions we offer compared to traditional competitors in several big-ticket categories. Under the Why Buy at Costco banner and the Price You See is the Price You Pay banner, we share with our members what's included in the price of appliances, tires, televisions, computers, and mattresses. You can see these online on our website of Why Buy at Costco. Just to give you one example, if you take a 4 set of high-end tires compared to a traditional retailer, we include, of course, installation, rotation, balancing, 5-year road hazard warranty. Typically, that's a lot less road hazard warranty at other places, or you'd have to pay for it extra. Ongoing flat repairs, nitrogen, and disposal of the prior tires. Just on the examples where the price of the tires itself might be very close to us, when you put in all the differences of those additional items, it's anywhere from a 15 to 25% savings on any of these items. Next on my list, talk about CostcoNext.com. A couple of comments on this seller platform. This allows CostcoNext.com allows our members to exclusive access to direct-to-consumer sites for top quality brands at Costco value pricing. Currently, there are 70 Costco Next brand sites with 15 additional sites in development. We will likely end this calendar year with about 90 sites and continue to grow from there. Costco Next offers everything from home improvement to apparel to pet to home to kitchen to electronics to accessories as well as sports, bicycles, and toys. You should check it out. It's a pretty good site. Progress continues to be made in our e-com, mobile, and digital efforts. A couple of recent enhancements. In February, we rolled out our new native mobile application homepage on iOS. The native homepage now loads in less than 2 seconds compared to 8 seconds previously. Needless to say, that's important when about 60% of our e-com business, both visitors and orders, are now done via our mobile app and browser. And last week, we rolled out Apple Pay to all members online, both web and mobile, on February 28th. App downloads during the quarter were up 2.8 million and currently total around 33 million. On the product side, a couple of other new items to comment on. In our food courts, we recently replaced the churro with an awesome freshly baked 5.5-ounce chocolate chip cookie for $2.49. It is awesome. It's a great tasting turkey sandwich for $6.99, with the roll of the latter being completed this week. In addition, we recently opened our first fully operated sushi offering in Issaquah, Washington, across the street from our headquarters, with 2 more planned to open in the very near future. This operation is what we have successfully done for many years, and throughout our Asia Costco's in several countries over there. The sushi program has proven to be a category where we can be successful in both quality and price, and we're looking forward to seeing more of that in the future. A couple of comments about inflation. In the last quarter, in the first quarter, we estimated that year-over-year inflation was approximately 0 to 1%. We'll now say that in Q2 it was essentially flat. And notwithstanding essentially flat, we're taking price reductions where we can. Anecdotally, everything from simple items like reading glasses from $18.99 to $16.99, the 48 count of Kirkland Signature batteries from $17.99 to $15.99, 24 count of Pellegrino from $16.99 to $14.99, and even 4 pounds of frozen 3-berry fruit blend from $14.99 down to $10.99 with new crop pricing. So we continue to do that. We always want to be the first out there trying to lower prices. Many new items in sporting goods and lawn and garden are being set with lower prices year over year, and overall, mostly due to reduced freight costs and lower commodity costs versus a year ago. And overall, our inventories and SKUs are in good shape across all channels. Overall, we've had good seasonal sell-through during the quarter. In terms of shipping and supply chain issues, we've been asked about that often of late. There's some delays, generally just a couple of 3 weeks, but mostly now planned for. First there was an issue a while back with the Panama Canal challenges. Then, of course, the Red Sea challenges. A lot of that has to do with changing the way ships are being routed. No meaningful pricing issues because of a lot of in-place contracts. Finally, turning to our February sales results, the 4 weeks ended this past Sunday, March 3rd, compared to the same retail calendar weeks last year. As reported in our release, net sales for the month came in at $18.21 billion, an increase of 6.9% versus $17.04 billion for the same 4 retail weeks last year. Again, just to announce what we did in the announcement earlier today, the U.S. Reported comp of 3.4% for February, ex-gas and FX 4.1%, Canada 8.4 and 8.3, other international 10.8 and 11.3, for a total company of 5.0 reported and a 5.6 ex-gas and FX, with e-com coming in at a 16.2 reported and a 16.0 ex-FX. Our comp traffic or frequency for February was up 6.2% worldwide and up 5.0% in the U.S. Foreign currencies year over year relative to the dollar negatively impacted total and comparable sales as follows. Canada by about 0.1% negative, other international by approximately 0.5%, and total company by approximately 0.1%. Gasoline price deflation negatively impacted total reported comp sales by approximately 0.5%. And the average worldwide selling price per gallon of gas was down approximately 3.5% versus last year. Worldwide, the average transaction for February was down about 1.1%, which includes the negative impacts from FX and gas deflation. In terms of regional and merchandising categories, the general highlights are as follows. U.S. regions with the strongest comps were Midwest, Southeast, and Northeast. In terms of other international and local currencies, we saw strength in Mexico, Australia, and Korea. Moving to merchandise highlights, food and sundries were positive in the mid-single digits. Fresh foods were up high single digits, and non-foods were positive mid-single digits. And ancillary businesses were up in the low single digits. Food court, pharmacy, and optical were top performers, with gas down low single digits on a lower price per gallon. In terms of upcoming releases, we will announce our March sales results for the 5 weeks ending Sunday, April 7th, on the following Wednesday, April 10th, after market close. And lastly, before I turn it back to Demi for Q&A, I'd like to take a moment to say thank you to many of you who have turned into each quarter, some for many years, to allow me to share with you Costco's results, both our ups and our downs, and thankfully many more ups than downs, and provide some fun and informative color on how we're doing along the way. Since going public in December of 1985, I have hosted all but one call, and it's been an absolute privilege and honor to do so, so thank you all. As you know, in early February, it was announced that I will be ceding the role of CFO to Gary Millerchip effective March 15th, after our second quarter 10Q is filed, and retire, including from our board, next January. It's a bit surreal of late, but what a wonderful journey it has been with such a great company and great people, including many of you on the call today. I have certainly been very fortunate. The good news, Gary joined Costco last week, and along with David and Josh, will continue to provide to you all the transparency and straightforwardness that we are known for. It will be a positive and seamless transition. With that, I will be happy to turn it back to Demi to open it up for Q&A.
The floor is now open for your questions. To ask a question this time, please press star, then the number 1 on your telephone keypad. We'll pause for just a moment to compile a Q&A roster. Your first question comes from the line of Simeon Gatman with Morgan Stanley. Your line is open.
Hi, everyone. Hey, Richard. Best wishes to you. Thank you for all your guidance. That's a metaphor since you don't give guidance. My first question is on the, it's like a parting question on membership, and I want to make sure this framework sounds right. I know you said it's if, not when, and part of the thought process is there were enough levers in the business, product savings, cost savings, to be able to drive an appropriate level of like profit growth from the business. And when that no longer presents itself, that's when the membership price increase can come through. And that could come through earlier than that, but that was one framework we were thinking in this as we wait to hear when it happens.
Sure. And by the way, it's when, not if, still. But really, we're joking aside, we're not that smart in terms of figuring out exactly why. I mean, we know that all the factors that we believe would, if we wanted to do it, would we feel comfortable in terms of renewal rates, new member signups, loyalty, all those things are continuing in the right direction. It really is a function, and I don't think it would be done simply because, hey, things have slowed down a little bit, let's do it now. We like the fact that we're performing well. We like the fact that most all metrics are going in the right direction in our business right now. We've got plenty of runway left. And given the economy and given everything else, it's us, it's Costco. So I think it is simply still not trying to be cute about it. It's not some big analytical formula. It's simply a measure of we will at some point, I'm sure, do it. I've been joking with Gary, it'll be on his watch, not mine.
And then maybe one more, Richard, is another question. The business has comped very consistently over time, and used to say, you know, I regret when it won't comp north of 4 to 5 because that's where it may be tougher to leverage our expenses. If you think about that framework, you know, does it still apply? And then as you hand the baton to Gary and even Ron, you know, do you spend more, or are there ways where you know the cost structure of the business can actually be altered to lower that leverage threshold point?
Right. Well, whether I would say it's probably more likely to go up a little than down, just because of whatever goes on in life, with inflation that happened. But I got to look back at the last few years. We and others were helped through the crisis of COVID, and we haven't given a lot of that back. If I look at our SG&A, I remember when in fiscal 19 it came in at a 10.04. I'm looking at these numbers here, and even in 20 it was at a 10.30 in the first quarter before COVID. And then, in fiscal 21, it was a 9.65, and then down to an 8.88, and now it's up to the fiscal 23, it was a 9.08. So notwithstanding that, I remember when it was slightly above 10, we said, well, it's never going to get below 10 again. And a lot of factors continue to change. But just the sheer high productivity that we have is, frankly, higher than we thought. Some of that was gained through COVID because of everything else going on, but we haven't given it back. The good news, we haven't given it back, and the good news continues to be that we seem to continue to be able to take market share. I think the fact that on big ticket items there's less SG&A, we continue to change the pack sizes of things for less freight, whatever it is. Although freight would be SG&A, but it is still a lot about sales at the end. And if you ask the rhetorical question, if comps went to 0, what would that mean? that would be tough on SG&A, but we'd figure other things out.
Yep. Okay. Best wishes. Thanks, Richard.
Next question comes from the line of Chuck Grom with Gordon Haskett. Your line is open.
Hey, good afternoon, Richard. Congrats on a great career for someone started on basically day one at the company. My question is on culture. You know, you've always said it was customers first, employees second, shareholders third, and that philosophy is clearly played out. So looking ahead, I'm curious how the new team is going to keep this culture intact and resist pressure from some of the non-founders of the company going forward.
Well, first of all, nothing has changed. It's not unlike the same question I think that was asked of Jim Sinegal after 28 years before he retired, and before we knew who his successor was going to exactly be. And I remember the board asking, you know, if you're 100 in terms of extreme value and extreme taking care of the customer and the employee and everybody else, whoever takes your place, what will they be? And he paused for a minute and said, I have no doubt they'll be at least in the mid-90s, if not higher. And frankly, after Craig was made that, in my view, whatever that number was, it increased towards 100 just because that's what we do. That culture is so ingrained here. And we talk about changing management. I always joke when people ask me as CFO how am I important to the strategic whatever of the company. The fact is we're run by merchants and operators, and we're there to serve and help them, and certainly add our voice. But the fact of the matter is, you know, in Craig for 12 years and now in Ron, you have people that have been here for 35, 40 years and were born and raised and have grown up in this culture. And it is so intact. Just last week when Gary joined us, he had to go through the required 2-hour Costco orientation, which includes the obey the law, the take care of your customer, the take care of your employee, the respect your supplier, and then if you do that, you can reward the shareholder. That's the one thing I can sleep very well at night.
That's great. Thanks, Richard. Enjoy your retirement.
Thanks.
Next question comes from the line of Michael Lasser with UBS. Your line is open.
Good evening. Thank you so much for taking my question, and best of luck, Richard. You mentioned previously that most of the metrics are moving in the right direction. So can you highlight which metrics are not moving in the right direction, and especially from a membership per club standpoint, are there any signs that some of the more mature locations are either reaching a saturation or starting to see a peak in that metric?
No, first of all, when I said most, I was just trying to be human, that, you know, nobody's perfect. Everything is working in the right direction right now. And actually, I wasn't talking just about membership metrics, but in general, knock on wood, things are working pretty well. When we sit in at our monthly budget meeting, more times than not, we get pretty excited about what's going on from a new merchandising standpoint, newness, buying with conviction and being aggressive and assertive out there. I mean, what we saw with just even these that simple example I gave you with changes to big ticket items and why buy them at Costco, we saw great changes in numbers. So we know that we've got a lot of levers to be able to pull to make this thing work. And so, no, I just said, honestly, I said most because, nobody's perfect. I didn't have any particular examples.
Understood. My follow-up question is on what seems like an inflection in the discretionary business. To what degree is Costco experiencing improvement in the gen merch categories as a result of aggressive changes, either like you had cited with the way you're communicating with the customer or the member, or aggressive actions to take down prices? And if you are pulling those levers hard, is there an opportunity to move even more aggressively to drive the discretionary business? Because it does seem like Costco's experiencing a rebound in some of these areas more so than the rest of retail. Thank you.
Yeah, and absolutely. What is it? It's called. It used to be NBD. It's Circana, which is that industry that shows you how you are on different non-food product categories versus in the industry. When we look at something like appliances in the last several weeks or a couple of months, the industry's flat and we're up north of 20%. Same thing with tires, more than that percent. And so now that you can't say let's do everything and everything will be up 20 or 30% because that's not going to happen. But at the end of the day, the focus, of the buyers, as an example, is coming up with new ways to do things, to have great pricing, and to constantly improve that pricing and figure out how to do that with our global buying power, with every time there's a commodity price increase, given an item business, we have buyers that are in charge of 20 and 30 items, if not less, not 200 and 300 items in a category. They know a lot more, in our view, about every cost component of that. And I think I feel very good that we do a very good job. I'm not suggesting others don't, but I know we do a very good job of getting on the phone immediately and working those issues. And as soon as we can get a savings, we're out there first passing it on. And that's just our religion. Now, we're able to do that partly because our sales have been relatively strong. And, we've lapped some things from last year that have helped.
Thank you very much.
Next question comes from the line of Peter Benedict with Baird. Your line is open.
Richard, thanks for taking the question, and my congratulations as well. Well done. It's been a pleasure. I wonder if you can maybe talk about Kirkland, the penetration, what's going on there, any member shopping behavior around kind of private brand versus branded, and maybe what some of the branded packaged good companies are doing to maybe get some volumes up. Just curious about your view on that.
There's not a lot of trade down, although when we sometimes have more control over certain private label CPG items that we're able to drive more business. And so we're seeing an increased penetration of that versus some of the brands sometimes. But then that gets the brands to the table to work to provide more value on the branded as well. We want to be both. But we haven't really seen, that was a question that happened, as, quote, the economy was, the question of, are we going into a recession a couple of years ago, and inflation was peaking at 7, 8, and 9%, and are we seeing a difference? So we did see if you look back over the last 20 years, and without looking at the exact numbers, it seems like every year we grow a quarter to 0.5% of increased Kirkland Signature penetration. And then there was one year when we were asked a couple of years ago, it seemed like there was 1 to 1.5 to 2, even 2% change in penetration. So people were, in my view, switching a little bit out. But that's changed. That we don't see that as much anymore.
Got it. And then just on Costco logistics, you gave some delivery numbers there. Just maybe step back a little bit. The penetration of Costco logistics within the business, how meaningful is that at this point? What's left in terms of maybe growing that? Is that just going to go with the big ticket trends, or are there internal initiatives to kind of drive further penetration of Costco logistics?
What it's done strategically, and I hate to overuse that word, it's allowed us to be much better in value and delivery times and quality, and brought the delivery costs down on big ticket items, particularly appliances and big screen televisions, mattresses and furniture, indoor and outdoor patio and and patio furniture and indoor furniture, some sporting goods. And before we bought Innovel, we're now called Costco Logistics, in the spring of 2020. And the year before that, in the U.S., we did about 2.2 million drops. And a drop is anything from dropping off a sofa to delivering and installing a new refrigerator, freezer, or washer dryer, and taking the old one away for disposal. Both of those are a drop, recognizing their extreme difference there. But we did about 2.2 million drops in the U.S., none of which we did ourselves. With the acquisition of Innovel, I think with this million this quarter, a rough number of 4 million drops, which I believe about 70% of them are over 4 million drops, and about 70% of them is us. We've reduced the delivery times. We've just introduced in some categories like 2-hour windows or 3-hour windows where you can choose, 2-hour windows where you can choose. So we're constantly getting better, and we've greatly improved the value. And when you look at something, a category like appliances, we're still a very low percentage of the industry. And, the fact that it was up, 20+% last month in or last quarter is a function of some of the things we're doing in terms of shouting out how good of a deal it is and doing a better job of that. But we think we have an opportunity to continue to grow those categories, recognizing they're all meaningful categories, but they're all small percentages of our total. That's one of the nice things about us, that we have lots of different categories.
Got it. Great. Well, thanks again, and best of luck, Richard.
Thank you.
Next question comes from the line of Rupesh Parikh with Oppenheimer. Your line is open.
Evening. Thanks for taking my question. And Richard, I also want to offer my congratulations on your retirement. So just going back to the core-on-core margins, they're up, I think, 25 basis points this quarter. Just curious what drove that strong performance, if there's anything particular driving that.
Well, on the non-food side, the biggest thing is, not the big, a piece of it is comparing to last year when we had extra markdowns. I think we probably talked about it last time that non-foods was a year ago had been down year over year because of some of the supply chain challenges we had when some things were coming in late after the season in case some of the big ticket items from overseas containers. So that was probably a chunk of it. On the fresh food side, I said it was down year over year a little. Fresh is competitive, and we're being ever competitive on it as well. But again, I don't view any of that as being terribly meaningful in terms of is that a big change that is coming. There's always something that's up a little bit and there's another thing that's down a little bit.
Great. And then maybe just one follow-up question. On the expense side, you guys did have better expense controls this quarter. So just curious what changed sequentially, because the growth rate did decelerate by a few percentage points.
I can't think off the top of my head other than I actually, someone across the table just said the word focus. At our budget meetings, which happen every 4 weeks with 150 plus people in town from all over the world, those are the kind of things we look at. And I think the operators are doing, are doing a better job of budgeting. And one of the things I think that came out at the last budget meeting in terms of budgeting, if you budget sales a little higher and they came in a percent lower, you got to control your labor costs. And so a lot of it has to do with focus and being meaningful to that. We certainly don't try to control expenses by not doing a wage increase when we think we need to. And we certainly have done that.
Thank you. Best of luck.
Thanks.
Our next question comes from the line of Scott Mushkin with R5 Capital. Your line is open.
Hey, thanks. Hey, Richard, I feel like we should be like raising your jersey to the rafters like a superstar's retiring here. It's never been without you, to tell you the truth. So, congratulations.
Thank you.
So here you are. So, yeah. So we'll have to see the CFO Hall of Fame. So a couple things, some of your comments that you made. You're doing this delivery in 1 hour in China. I think you started going from 1 club to 3. Is that something you envision, that can expand outside of China? And how should we think about that, maybe even vis-a-vis the U.S.?
Well, in a way, we're doing same day here with a few people, most notably Instacart. And a little bit was shipped down in the southeast, and I think we've got a test in Texas with Uber. But at the end of the day, we had that same day delivery already as function. Over there, it is a third party that's doing it, like Instacart or these other ventures here. So it's new. It's not something that's new to the warehouse club industry in China. You could look elsewhere and find it too, but it's certainly something that makes sense. And again, in part because of social media, there's been a lot of publicity and from the day it launched 3 days ago, it's gone nuts in terms of how many page hits it's getting and all that stuff. But it's just part of the business.
Got it. And then we've talked about this over the years, and I think you said you're going to do 28 net new clubs this year. What's the capacity of the organization? Where do you envision that going to 35 and 40? Like, how should we think of it as we move out, 3 to 5 years? Is it something that's going to, trend up?
I think, well, who knows, but I think generally it's probably trends up a little. There was a few years there, excluding the year that when COVID hit, that we only did like 13 because there were shutdowns in certain countries of construction as well as the U.S. But if you look back, excluding that year over a 3 or 5 year period, plus or minus a couple of years there, it was about 23 a unit. Without looking at the numbers, about 23 units a year. And at the time, you said, "What do you see over the next 10 years?" What we saw collectively is somewhere in the, hopefully targeting, let's say 25 for the next 5 years per year, and then going up to 25 to somewhere in the high 20s, and if not 30. I think that's generally the sense that we feel. Could we do more? Yes. Are we comfortable doing it this way? Yes. I think part of that is it's such a hands-on business. I get to say that from sitting here in headquarters most of the time, not traveling like my colleagues do in operations. But Ron's a great example. I mean, he and several regional executives in operations, if there's an opening somewhere or not an opening, they're out visiting. Usually at least 2, if not 3 weeks a month, are out for 3 or 4 days, jumping around, visiting locations, not only existing locations but new sites. And so I think from a standpoint, and the other thing is, and particularly in newer countries, you want to get the first one open so you can train 50 or 80 people that want to move to the next location in that city. That'll help that one go. And we were very fortunate a few years back in the first Shanghai and Minhang in China, where we had a number of employees from Taiwan that wanted to move and be promoted into new location, new jobs over there. So that helps us when we have 1, then 2, then 4, then whatever. So we take it slow. All I know is we're all very busy, and particularly the operators and merchants as well. And so that's kind of the paradigm that I think that we're going to continue to work at, something in the 25 range and then heading up. Just a quarter ago, I think our budget for this year was 32, and now, or 31. Now it's 28. And that's simply timing. There was 2 or 3 that are pushed, that for whatever, construction delays, or you found something in the soil delays, or whatever it might be, they might have moved from mid to late summer to early fall, which is the new fiscal year. So I'm feeling pretty good that we're going to open 25 plus for the next couple of years, and then probably 28 plus, and go on from there.
Perfect. Thanks, Richard.
Next question comes from the line of Greg Melich with Evercore ISI. Your line is open.
Hi, thanks, Richard. You mentioned the word surreal, the feeling retiring. I'd say it's almost as surreal as a $4.99 chicken. So thank you for all the help over the years. I would say, I guess 2 things I wanted to touch on. One is ticket pressure. It looks like just in the most recent sales, with traffic growing more and more, that you're seeing some AUR pressure. Is that 0% inflation turning to deflation? As the merchants are seeing into March and April?
Well, I think that if there, again, the inflation number is a calculation based on costs and mix. I think it's probably, I wouldn't look too closely at if the average ticket was up a few tenths in the quarter, and then it was down 1%, down in February by a tenth. That's still relatively close. Some of it's a mix change, I'm sure. And some of it is some of the examples I gave you about lower pricing. Even if the underlying cost hasn't changed, some of it may be in terms of how we package, and we take advantage of that. So, and that's on the sales side, and not on, not the exact cost from yesterday.
So looking ahead, that number of flat looks pretty good from what the merchants are seeing today.
Yeah, I think, when I go to the last budget meeting 2 weeks ago, I think there's, and the presentations, there's a lot of, I used the phrase a few minutes ago, upscaling. I didn't use that phrase, but then buying with conviction. I mean, I think the buyers are looking ahead right now, in an offensive way, in a positive way. Hopefully we'll be right, but we feel so far we're being right.
I wanted to follow up with my second question on the Instacart side of e-commerce penetration. What would e-commerce penetration be now in the U.S. if you included the Instacart delivery and the other deliveries?
Yeah, Instacart's 1.5% to 2%, something below 2, but more to 1.5, which is still on a $200 billion retailer. It's a lot, and we don't include that because the Instacart person comes in, buys it, and checks out at the front end. So we don't include that. So you'd add, depending on rounding, you'd add 1 to 2% to the top line number.
Got it. Well, thanks. Thanks for everything, and enjoy retirement.
I hope to see you all.
Next question comes from the line of Kelly Banya with BMO Capital. Your line is open.
Good evening. Thanks, Richard, and have to add my congratulations to you. It's been a pleasure. Just wanted to ask where Costco stands with retail media and advertising dollars. I think the last update I had was in the range of a few $100 million. Or just curious if you're willing to share with us where that stands today, what kind of growth that is experiencing, and just the company's thought process on investing in that down the line.
Well, without giving numbers out, we know there's an opportunity there more than we've done in the past. In the last 6 or 8 months, we brought on people that are seasoned in this business to help us, and it's a point of focus. We know that there's money out there. We've always been very successful in other forms of vendor buckets, whether it's end caps or advertising in our own Costco connection, and of course over the last several years some advertising online or banners or placement, but there's a lot more that can be done there. Rest assured, whatever it is, we're going to use it to, just like when we always said, if we can save $1 on buying something, we're going to give 80 or 90 cents to the customer. I think that mantra will continue on this side as well. So, but there's certainly ability for more dollars out there. Some of our big retail competitors have talked about, doubling in 5 or 6 years what they have. I think again, it's a lower market share for us, so there's a little more opportunity for us to continue to grow that.
Thank you. And maybe can I just follow up with the decision to roll out Apple Pay? Costco is pretty notorious for being strict on the payment method you could use. So just maybe the thought process on that, what you expect that to do for your e-commerce business, and any economics you can share.
Yeah, on e-com, there's not as many stored cars for our members. And as we're doing more with a digital wallet, that'll help as well. So it's something it should help.
Fair enough. Thank you.
Next question comes from the line of Oliver Chen with TD Cowen. Your line is open.
Hi there, this is Katie on for Oliver, and of course, best wishes to you in your retirement. Just wanted to talk a little bit about the Kirkland price gap versus national brands. I know you touched on the Kirkland brand a little bit earlier on the call, but how has that price gap changed, especially year over year? And how has there been any impact to unit elasticity given that price discrepancy? Thank you.
Well, we definitely have seen an impact from it. I mean, historically, the view was it has to be at least as good, if not better quality than the leading national brand, and at least a 20% savings as compared to what we sell the national brand for. And those metrics continue in that regard. I think what we've seen when we look at some of the items that have risen greatly in price, like paper products, on a percentage basis over the last several years because of freight costs, because of pulp prices, because of energy, all those things have dramatically increased. And what used to be I don't know the exact numbers, but for an 18-pack of a 24-pack of toilet tissue or or a 15 pack or 18 pack of paper towels, you've got price points in the high 20s, if not low to mid 30s. And where we can show a dramatic savings on that, we've seen dramatic changes in unit market share towards Costco, towards Kirkland Signature. But that's something that's been an iterative process over many years. Probably goes up and down a little bit. I would say it's gone up a little bit in terms of a little more of it penetration in the last couple of years.
Great, thank you. And then just a follow up on the store discussion and unit growth. Can you just provide a little bit of color on how the international store openings are performing, just from a productivity angle? How is that versus the more tenured stores as well as the domestic stores?
I don't think there's a big difference. In new markets, it's always a little slower. So like when we opened originally in Iceland or Sweden or Auckland or some of those, or France several years ago, you're always going to start out, or frankly Japan 20 years ago, you tend to start out lower. In some cases, it's also a question is some local vendors may not want to, local country vendors may not want to sell you because they want to upset all the big traditional that have all the market share before we enter. And once we get 2 or 3 open, they talk to you a little more. And so I think all those things help us as we grow. Certainly it's changed a little bit in the last few years, China being the most recent example. When we opened the first one in Minhang in Shanghai, about 4 years ago, it made international news based on just the sheer number of members we signed up and everything. So we have a lot faster start. I think each year we have a lot faster start than the year before, and so I don't see a big difference there. We certainly, if you look in the U.S., I mean, I think one thing that's interesting is this fiscal year we're going to open 28 units. Let me get my page here. And I think of the 28, 20 plus are in the U.S., which is some people have asked, well, has it slowed down internationally? No, international takes a little longer to do. But what's interesting is we have a lot more runway than we ever thought possible. If you had asked us 5 years ago, by now, how many would we be putting in this year in the U.S., we would not have said 20 plus. It's got to slow down at some point. But the volumes that we're now doing in these locations, we've got to bleed some of that off. And so that's one good point. And then we still got plenty of going on overseas, and you'll see that continue to ramp up as well.
Excellent. Thank you so much, and best wishes again.
Thanks.
Next question comes from the line of Scott Ciccarelli with Truist. Your line is open.
Thanks for the time, guys. It seems like you guys are doing some things to cut down on membership sharing, food court usage from non-members, et cetera. Richard, are you seeing something in the business that gives you concern that there's a growing issue from things like membership sharing?
No, I think part of it is, first of all, I think the storyline sometimes is a little greater than the reality. During COVID, we did a little bit more. There was a little bit more membership sharing. You had individuals where, one family member, maybe not the one that had one of the 2 memberships, was coming into shop with mom or dad's credit card, and we allowed it. And then with the advent of self-checkout over the last several years, when you walk in the front door and you just flash your card, and do they look at it or not, who knows? People would get in, and if you're going through self-checkout, you're not having to show your membership card to the cashier. And so there's probably an increasing but still small level of abuse of that privilege. But we also had complaints from members saying, I pay, why shouldn't they? So the view is we needed to just shore that up a little bit. And we did. We did it over a period of 6 months, I think about 6 months, where we, first there was warnings and then ultimately changed. Are we getting some new signups from it? Absolutely. But it's relative to the 60 or 70 million members, it's not terribly meaningful, but it's more fair and the right thing to do.
Yeah, I mean, that was actually, you started to answer it. So you've seen some acceleration membership. Should we kind of expect to see that in the future, like what we've seen with Netflix, for example, as they cut down on their sharing?
Right. Well, it seems like Netflix had a much bigger issue, or the ability to share was much easier because, first of all, it's electronic. In this sense, you still have to show a card when you walked in. And we're actually doing testing on that too, in terms of having your card be scanned and reviewed when you walk in. And we've done that in the UK, I believe, for a few years. And so it's all about just, I would say it's as much hygiene as anything else. And it'll be slightly profitable to the extent that we're making sure everybody, I think we signed up more members than that were non-members than lost the small sales that non-member did.
Makes sense. Thanks again, and enjoy the next stage.
Thank you.
Next question comes from the line of John Heinbockel with Guggenheim Securities. Your line is open.
Congratulations, Richard. Enjoy your retirement. You'll be missed. So, when you think about, you don't have many pain points in your clubs, but when you think about kind of throughput and things like, I know you tested BOPIS and cost really didn't make sense there. Things like that, and/or scan and go. What do you think there are some unlocks here? To do more volume and/or reduce any pain points.
I think the biggest challenge with pain points, first of all, is flow of merchandise and pallets through the system, which we continue to work on and improve. Never, if you'd asked us 10 years ago, will you ever have 150 of your 600 U.S. locations doing over 300 million and 40 of them doing over 400 million? The answer would be no way, even with inflation. The fact is we're doing a lot more volume than we've ever thought we would do. And so the biggest answer of not only making it a little more efficient, but driving more sales is cannibalizing. We find existing members that sometimes will say, I don't want to go there, it's too busy today. And by opening up that third or fourth unit in that city, we're seeing not an increase by a third or a fourth of the membership base, but a significant increase in sales. And but I can't think of anything specifically. We're always doing things with, David mentioned something here. One of the things we should be doing shortly is having warehouse inventory online. So when you go online now I say that, a couple of people in the room are smiling and says it may be a few months or a few more than a few months, but it'll be soon. But at the end of the day, if you look at something to buy online and we have it in the location or two in the zip code where you typically shop, and the location you would shop physically, we'll let you know you can buy it there. And in many cases, it'll be cheaper if you go pick it up yourself because the online cost might be higher. Is typically higher, particularly on the non-food items. So I think that's something that'll help that as well.
And secondly, is there any way to tell, you think about email outreach? I mean, it seems to be getting better and more call to action. I think about the 7 days of spring that you're in the middle of now. Is there a way to tell the productivity of that outreach, and is that driving some of the e-com pickup?
Absolutely. And yes, there is a way to tell. We're looking at it. Again, without going into a lot of detail, a couple of years ago, we brought in a new person in charge from IT in terms of all digital. He's built a team. They're working closely with merchants and operators, but mostly with merchants in terms of doing these types of things. And, we've seen, again, lots of improvements with our app, with our desktop. It's getting less clunky by the day and more ability to do some items to drive sales and some promotions like that.
Okay, thank you.
Our next question comes from the line of Chris Horvers with JP Morgan. Your line is open.
Good evening, and we'll miss you, Richard, and welcome aboard, Gary. So on the MFI, did you mention how much the FX impacted total MFI growth year over year? And more broadly, it seems like it's becoming more competitive to acquire customers in the club channel. Couponing amongst your peers has really accelerated over the past year. Is that what you've observed? And do you think it's still escalating, and how are you responding?
I got to tell you, in the last 12 months, we opened like 3% new locations. We had a 7+% increase in new members. So we're not finding, we do a few promotional things, but I would say we have not increased the types of things we do at all. And you're right, at other places, there's not a day that goes by you can't get a deep discount, much deeper than we've even ever done on an ongoing basis. And so, no, we're not doing anything different. We're, are we pleasantly surprised by the rate of new signups? Yes, it's nice to hear and have. And I think the fact that things like social media has helped us with the value proposition. And so, no, we're not doing a lot of things in that regard.
And just from a technical question, one of your peers talks about tenured renewal rate. The 93% that you quote, does that include like the year one renewal or in anyone that comes through the door on one of those digital coupons?
Yes, it does. And we've been doing it the same way forever.
Got it. Thank you very much and best of luck.
Thank you.
Next question comes from the line of Robbie Holmes with Bank of America. Your line is open.
Oh, hey, Richard. My congrats as well. You will be missed very much. Listen, just a quick question. I love the credit card rewards program. It's amazing. It's like the best thing that's ever happened to me. The Citi card you guys do. Is there any issue or change with the late fees or anything going on that could change the rewards program or anything there?
Well, that's the new recent headline of that happening, and we'll have to wait and see. Look, at the end of the day, it may change the economics. There are other levers that we've talked to them in the past, our issuing bank, about what we could do, but nothing is done at this point.
Got it. Thanks again, and congrats on your retirement.
Thank you. Two more.
All right, guys, we're gonna end it there because I got to get out of here now. We've been listening to this guy for an hour. He wants to keep taking calls or questions. So, look, good Costco earnings, nothing too crazy outside of that. But in general, the stock has not done the best after hours, and that's primarily because, well, it was up a lot. I mean, $348 billion market cap. It was up basically 15% year to date. It's down 3% now after hours. Marvell down 6%. Broadcom down 2%. Big Bear is the one that maintained its downside after hours, down 19%. Mongo as well was down 12%. Now it's down 9%. And DocuSign was up 15%. Now it is up 8%. So not the best, but it's definitely, not the greatest results for some of these companies as well. I definitely think we've come to the conclusion that Twitter is bots. There are no way that Twitter has 2,000 people that stayed through that entire call. There's just no way. So Elon, I mean, like this objectively, there is no way we have 2,500 people on Twitter that are saying nothing in the chat, that are watching or listening to Costco's earnings. Like, I mean, I just don't think if this was Palantir earnings, I would understand. This is Costco earnings, so I think it's a little different. So yeah. We'll just stick to the YouTube numbers from now on. So thank you to the 250 people who are still here. I'll be live tomorrow morning, 8:45 a.m. New software product. I'm launching 10 a.m. tomorrow. Will be super, super exciting. If you are subscribed to my newsletter, there's an inside for those who are not. I'm launching it tonight at 9 p.m. on the newsletter. So if you are want to get it early and want to get access to it early before it launches tomorrow morning, dailypalantir.substack.com. There it is right there in the chat. You can subscribe and you can you'll get the software tonight at around 9 to 9:30 p.m. Eastern Standard Time. But if not tomorrow morning, that'll be launching and it'll be super fun, mainly for Palantir investors. Okay, so that's the final thing. SMCI and Twitter is a bit, SMCI and Nvidia, is a bit insane as well. SMCI right now after hours is up 2.66%. It's at 1,200. And Nvidia, I don't understand it, but Nvidia is up another 1.5%. It's at 938. It's $12 away from 950. So we'll analyze tomorrow and we'll see what happens. Chin, I can see you in the chat. Nihad or Ninand. I'm sorry if I'm saying that wrong. I can see you in the chat as well. So I can see the people who are putting the chat in the Twitter. I just don't, and I know there's some of you there. I just don't think there's 2,500 people that listen to Costco earnings. I just don't think that's the case. But other than that, I do see you guys. So thank you all for being here today. All right, so we'll have a lot to cover tomorrow. Bitcoin, we'll be covering that. It tried to make a run at 69,000, got stopped at around 68.5. Right now, it's about 67. Software launch will be tomorrow, 10 a.m. So super, super excited for that. Make sure you're following on Twitter, and you'll be able to see the launch on Twitter. Bitcoin right now, 67,204. Robinhood after hours, 1635, basically flat. And then Palantir, 2639. It was down about 0.26% after hours. I'll have a video about aipcon in a couple hours here on the channel as well. All right. Thank you, everybody. Have a great night. I will see you tomorrow, 8:45 a.m. Eastern Standard Time for the market open. Bye, everyone. Have a good one.